Click like, click like, click subscribe. This is TopstepTV.
All right, it is time for Mindset Matters. And our special guest today, Dr. V. Dr. V and I had a very nice conversation last night and very much looking forward to spending some time with Dr. V and all of you today. If you have questions for Dr. V, you can go ahead and start putting them in now. But I'm thinking that the things we're going to be talking about are going to jar a lot more questions out of you as things go along. We'll probably spend the last half or the last third of the session today answering your questions. So anything that pops into your head, let us know. We will be collecting those questions and answering those as we get further into the session today. I always feel very lucky whenever I have the opportunity to talk to the good doctor. I know we all feel lucky. And Doctor, you have been an active trader for a number of years. You are a clinical psychologist. You are an expert in the field. Hopefully you had a good trading day today, and I know we're all very excited to get started. So what is our title and our subject for today?
What is up, Topstep? Thank you so much for being here with us. I'm so excited. So first of all, when I get to hang out with Hogue, I'm so happy, right? Because I'm a very big fan. I'm very impressed by his work. And so last night we decided to maybe have a little chat on what we should talk about today, right? And we just started to chat, and I was like, wow, this is great. So we should take that chat tomorrow, because I think people would be very interested to go in your mind a little bit. I mean, Hogue has lived it. He has done it. Like, he saw psychology, he saw the rawness of humanness in trading. He saw it. And then he transitioned from the floor, the pit, to the computer, to electronic trading. So please give me like thumbs up for Hogue today. It's amazing. We're so lucky to have him. Please give
You're
him
too
some
kind.
love.
You are too kind. You are too kind. But yeah,
No,
I've been around and I've seen some stuff. That's for sure.
yeah. So I want to introduce the topic today by so mindset matters. Okay, so winning the inner game. So like, profitability is a journey, right? And process is a path. We tend to picture becoming consistently profitable as a destination. I can't wait to get there. But the truth is, and Hogue will tell us more than I, first live experience, it's more like, a journey, right? A roller coaster sometimes. It's hard. And like I say also, like, we really suck at this, like, naturally, right? We're not wired for becoming successful traders. We are wired to be human and survive. So how can we, like work around that concept? Like just being self-aware of that and how to protect ourselves from it. Um, so science and the markets themselves will show us something different. That profitability is not a destination, like I just said. Okay, it's an ongoing journey, and it's shaped by the process, the very process, the path that we decide to take every day, right? So every trade, every decision you make literally will reinforce or reshape your brain, your habits. The good news is that there's neuroplasticity, right, Hogue? We can change.
Yeah, we can change it.
So,
Yes, we can.
yeah, so like I
Just want to
said,
make some.
Hogue knows this better than most. He spent years in the chaos, organized or not, and adrenaline of the trading pits, where a split second decision and mental resilience were the keys to survival. So, yeah, I'm just truly inspired and excited to share that hour with you today. And so, yeah, so let's start by going back to the pit, Hogue. What was a day in your life? How did it all started?
Well, I mean, it all started because of this guy. My dad was a trader on the floor of the Board of Trade for 40 years. And he imparted upon me a lot of dad wisdoms and taught me a lot. Um, I was at the Mercantile Exchange though, and he was at the Board of Trade. We overlapped a little bit, uh, but I don't think anybody, anything, any education, anything. I mean, you can be an economist and still never really learn how to be a profitable trader. And when you're talking about, you know, the the journey to profitability as being a process and a lifelong process, that is absolutely true. One of the things that he taught me, well, relatively early is, if you start making money trading, uh, make sure you put some away, because nothing lasts forever. You're going to have good times and you're going to have bad times. And I've had a lot of both. I started at the Mid America Commodity Exchange, which is kind of the mini grains. Okay, the contract size for the grains was 1,000 bushels instead of 5,000 bushels. So it was kind of getting your having training wheels on, learning how to trade. And I did that for a couple of years, and then I got hired by a proprietary trading company over at the Mercantile Exchange in the S&Ps. Now, I knew a lot of people there. I'd worked in the S&Ps for years before going over to the Mid-Am, so it was kind of like going home. But putting that badge on the first day and stepping into the trading pit and seeing everybody around you, and you and I talked about this, Vanessa. One of the issues that I had, and I know a lot of people have had, was, I had always worked for somebody. I had always, been paid for the work that I was doing. And I had never had the opportunity to put myself in a situation where it was completely up to me to make money. And I stood there in the pit and I said, wow, I have this badge, I have this opportunity, but I have no idea what to do. And, I could lose money doing this. And that was a real eye-opening experience for me. Now, I had traded, made a little bit of money at the Mid-Am, lost a little bit, made a little bit, lost a little bit. But this was the big leagues. The S&P 500s at the Mercantile Exchange was one of the biggest, meanest, nastiest contracts that there was. I mean, a tick was $25, a handle was $250, and that was just 10 ticks. So I mean, we're talking about, basically five times the minis, and a lot of people are now trading micros. So the risk was really tremendous, and it was quite a learning process. There were, of course, good days, bad days, and we can kind of talk about some of the things that I experienced. And and having the opportunity to work with trading, I call them more therapists. because the prop firm had a couple of guys that were on the payroll that we could talk to. And this was kind of before trading psychology was kind of in vogue, right? I mean, nobody really in the early 90s was talking to trading psychologists. It was kind of the beginning of people's understanding of how important the psychology of trading was. Doctor, I was an art student. You know, I had moved downtown. I was an art student. I was attending bar, and you know, my older brother was at the Mercantile Exchange, and he says, "Well, why don't you come down there, get a job as a runner, and see if you like it?" You know, so I started as a runner, and it wasn't too long until I'd kind of fall in love with the idea of the trading floor. The social end of it, of course, was a big part of it, but there was also the business end. And I had seen a lot of, you know, I had seen my dad succeed there and a lot of his friends, you know, succeed, you know, huge on the trading floor. So it wasn't too long until I decided I wasn't going to starve for my art and I was going to go for this. So, you know, I worked my way up on the trading floor, which is no longer available to anybody to do that. So, you know, I was a runner. I was a phone clerk. I had a job as a deck holder. I moved up to an ARB clerk in the S&Ps. And I tell people, I told you this last night, aside from that first interview, getting the job as a runner, which was, yeah, okay, you come tomorrow at 7:00 when you can start. I'd never had a job interview ever since then. So the trading floor, people would notice if you had a knack for it, if you were good at your job, and they would come and they would, you know, they would kind of cherry pick the good ones to come work for them. You get cherry picked and you get moved up and you get moved up and you get moved up. So, you know, I'd saved up enough money, bought myself a seat at the mid-am, and just in the mid-am, it was, you know, it was smaller risk, smaller profits, but it was a good place to kind of cut your teeth on it. Um, but still didn't really understand the importance of um of the importance of the mindset. It was, you know, it was always about money. It was always about, okay, how can I make a few ticks on every trade? And the mindset really never came into it. And I'd fallen into you know, a number of occasions, and this is one of the things we're probably going to talk about is uh we're not wired for success in this. You put on your first trade, and if that trade goes against you, you automatically default to, well, I'll wait. Maybe the market will come and make me whole again or actually make me money. And most of the time, you're going to find that you're just going to create bigger losses. And the other side of that coin is you get a winner on, and you're like, oh my God, it's a winner. I better take it or I'm going to lose it. So you end up, you know, making $25 and losing 250, making 25 and losing 250. And it's a completely fear-based thing, but I think most people are actually wired that way. I haven't known anybody that didn't have those thoughts in their mind when they first started trading. And that is one of the first things that I think people need to rewire their brain about, is understanding that cutting losses and understanding when they're right the market and being able to maximize profits on that is where you're going to find profitability. And there's no way that any single trade or any series of trades or any series of any length of time in this industry, you're not going to have losses. It's just part of it. One of the first things on the trading floor was, hey, congratulations, kid. Learn how to take a loss. That's preposterous. Why would I
Becoming
learn how to take
a
a loss? I'm here to make
gatekeeper.
money, right? So
Yeah.
that was one of the first things that was taught to me was, you know, you got to change your mindset and the way that you deal with losses and the way that you deal with wins. Don't wish the
And
market back. Get out.
yeah, and I want to bounce on that topic because we all have done it. Okay, we hope when the trade goes against us, we hope that it's gonna turn around. Um, because we think hope is a strategy at some point, but also because cutting losses, like you mentioned, means we have to quit the trade. We have to make it official that it is not working. And quitting can be hard for human beings. It's like, oh my gosh, I was wrong. So sometimes it's even more than the money. It's just the trade is dead, right? It's not working. There's no heartbeat. It's not alive. It's not going my way. So that is
Bury it.
hard to, yeah. So I think there's a part of that too. And it's training. There's nothing, nobody is wired for being okay with losing money or having a bad trade idea or quitting a trade idea, right? Making a loss official, not on paper, is hard and requires work. And when I say work, I mean you need to desensitize your brain with repeating the same thing over and over again to get stopped out where you should, but also have on the side mental imagery exercises. So I remember in my early beginning, but I'm a baby trader, okay? But my first year, my second year too, I would go to bed and trade in my brain and just feel the stop loss, feel the pain over and over again, knowing that when I do that, I protect my capital. Oh, okay, so I'm winning by losing. Like
Best
take my
loser
100
wins.
bucks. Yes, take my money so I can protect the rest of it. It's like my fee. It's like a business fee, right? So you want to
Right.
get yourself into trade, you pay a fee. And then you expect to make profits. It's like you invest. You want to sell shoes, so you buy the shoes and then you want to sell them higher, right? Well, maybe nobody will like the shoes. And you will have to stop selling these shoes. But you have an expense. You invest in a trade and then you see how it goes.
So changing that imagery in your brain on dealing with losses, a lot of people will equate those losses to something inside themselves, which really doesn't have anything to do with who you are as a person. How would you suggest somebody changes that imagery in their brain when it comes to taking losses as just part of doing business instead of taking that loss internally and beating themselves up about it, because they're going to happen. And if you're anything like me, I've always been very hard on myself. I work on it all the time to improve my inner dialogue when it comes to these things. Here's one suggestion, and I'm looking forward to hearing what you have to say about this, Dr. V. I stood next to a guy in the pit for a number of years, and he'd be trading, and every time he took a loss, he would get out of the trade and say, "Okay, good." I say, after a while, I'm like, "Why do you say good after every time you take a loss?" He says, "Well, because I got out of the trade, number one, and number two, I view it as buying information from the market. It's not a loss. It's paying for information from the market." And I thought, well, that's a really good way to think about it. Is okay, that one didn't work, but what did I learn from it? But
Tuition.
as far as not internalizing and calling yourself bad names every time you take a loss, how does a trader kind of change that imagery? And I think that's one way. I'm sure that you've got other suggestions for that.
Um, I think we need, first of all, okay, we need to identify, to become self-aware, and I'm sure everybody knows that now, right? The market exposes stuff, and we need to see it and work with it, okay? If we want to make like it's not there, it's just gonna repeat itself more and more until we became aware. So, what does loss represent for yourself, first of all? And then I think we have to go back to how can I learn for me, my own signature, to dance with the market? What is my recipe, my GPS? to like travel in these uncertain land, right? Since we don't know what the market will bring, it is uncertainty all the way, right? We never know. Okay.
Hmm.
What system can we put in place that we know we can let it work for us? And then we need some detachment, because if a trade doesn't work and we did everything right according to the plan, then it's just a matter of probability. It's not me. It's either the market or my system that doesn't work properly. So that's why I always say, also with people I work with, to take the pressure off a little bit. Okay? What I mean by that is that the first stages to become a profitable trader is to be a scientist and go there and experiment different things until you find something that you're comfortable enough in, a strategy, a trading style, whatever it is. And then when you choose that, you say, hey, I feel comfortable in this. Then there's the trade management part, right? Because it's not because you found yourself a nice strategy that you will know how to manage the trade, right? We can trade, all of us, same exact strategy, and still some people won't make it. So that's another part. Now, first of all, we identify according to our personality, our emotions, our past, etc., what fits us. And then we will have to experiment different kind of trading management and then find what works for us too. So there's many layers to that, but that's very important because that's the way we detach ourselves. We are not putting ourselves in the market. We're letting the system work for us. So we need to reach that level of detachment and curiosity, I think. Becoming detached from the outcome. I'm letting the system show me, is it a good system or not, without touching it at first.
Right.
So what are your thoughts?
So, I mean, having a system that you can, or a strategy that you can pretty much operate very consistently is, of course, going to provide much better information about the success of that. The longer, of course, you do it, the greater information you're going to get. But why is it so hard for people to just, I mean, first of all, you have to have a certain degree of knowledge and experience to be able to put together a strategy where you're going to take, every trade the same way every time for that setup, right? I mean, I would suggest anybody would start with find one setup and trade it consistently over a period of time. Don't optimize it, don't mess with it, don't monkey with it, don't lenny with it, because it's the only way you're going to find out if that strategy is going to pay you over time and in different market states and all of those things. But it takes a certain amount of experience and knowledge to do that. Once somebody gets to that, why is it so difficult just to follow the rules?
I think it's trust. It's dealing with uncertainty. Again, it is going against our primitive instincts. It's like jumping off a cliff, right? So some traders sometimes they ask, "Oh, so how do you get conviction?" Conviction comes with experience because you've seen the data. It's like a radiologist seeing all these images. Now he sees a brain and he knows right away there's something wrong with the brain because he sees the patterns every day. So it comes, with experience, with desensitizing the brain, saying it's okay, I'm safe. Even if my stop gets hit, there's nothing bad will happen to me. Of course, you have to be a good at risk management. Okay, so You keep the same amount of risk. Okay, you manage the risk. It's very important because it's not how much money you can make on a trade, but how much are you okay to lose. And that amount should be small enough not to hurt your account, but big enough to be significant for you. Okay. So for you, Hogue, how was it to, how was it to detach yourself from the losing trades? What helped you on the mindset perspective?
Okay. I'm going deep here. When I started with the prop firm, I started to really kind of get into the kind of mental game of things, right? So, one of the barriers that I came across, and I'm sure I'm not the only other person in the world that has come across this barrier, was self-esteem. Okay. Um, I've always kind of wrestled with my weight, never been a real pick 'em up easy kind of guy. Uh, and I was kind of wrestling with, myself internally about who I was and trying to become a good trader. It just wasn't working. So these trading psychologists that I was working with said, well, you need to start doing things that are going to improve your self image. You're going to go across the street to the World Gym every day after the close for 2 hours, and you are going to go work out 5 days a week after every work day, and you are going to get yourself in the best shape of your life because this is going to help you with your self esteem. It's almost like putting on a new suit or a new dress. You know you look good, so you feel good, right? So, and they had a spy over there too, and they told me they had a spy. For 6 months, I was there every day. I took a day off. The next day, they knew it. They knew it. So that was half of it. The other part of it was you have a tremendous opportunity here, and you have a tremendous opportunity to help others. At least once a month or every couple of weeks, you're going to go and you're going to get some sandwiches, and you're going to walk around and you're going to find people that are less fortunate than you, and you're going to give them a sandwich, or you're going to go, work at a soup kitchen for a couple of hours once a month, just because you are in a position to help others, and helping others will help you help yourself. So that was one of the things that just having a stronger physical body, physical mind, physical feeling about myself was a big part of me being able to talk back the dogs in my head that were telling me how bad I was at everything. And it really made a big difference. It's been a while since I've been at the gym, I'll be honest with you, but I've been able to work with those demons a little bit better because of the things I learned at that time. So, this is a hard thing to do. Then the markets will drag out every weakness in you and exploit it on you. And the sooner you can figure it out and let go of those venoms and those demons, the better off you're going to be. So, that was very early in trading. I was able to make money, always ended up, giving it back. And, they say self-sabotage is a thing, but I don't know if anybody's a good enough trader to actually self-sabotage. But you can do things to hurt yourself, like oversize, overtrade, all of those things,
Exactly.
right?
Yeah, exactly. When we talk about self-sabotage, we don't mean that you on purpose you want to take a losing trade. That's not what it means. But it means that you will try to protect yourself in ways that will hurt your trading. You will try to repeat some habits, maybe like have fear in the market. And we know that fear in the market is not helping us. So the self-sabotage part is how we manage that trade. But of course, nobody's taking a trade to have a losing trade. I mean, come on, right? Although in my early days, I would, one day I was so desperate. I mean, I got lucky. You know, when I started, I just shorted everything. It was a bear market, and I was making money too easy. And I thought, you know what, this is easy. I knew it. I knew I had to study and everything would go right. And it didn't go very well for a long time. And one day I was so desperate. I was like, okay, so what about today? I'm just shorting when I want to long, and I'm just longing when I want to short, you know? So maybe I was doing it. But what we find also is that when we stop caring that much, we make more money.
Yeah. Dr. V, we have a name for doing that. That's the Costanza trade. You do
What?
the opposite of whatever you think you should do. Because think about it. I'm sure there have been times when you're in the market and every time you buy it, it's a loss. Then you sell it and it's a loss. And then you buy it and it's a loss. And then you sell it and it's a loss. So if you were to do the opposite of everything that emotionally you were driven to do, you'd be, like my dad. Well, I don't want to say that. You'd be in much better shape, and there's information in that. Like we have something, and I've introduced it to a lot of traders here, called the Emotional Trading Journal, where each trade you keep track of things that are happening with you mentally, physically, and emotionally. And this was something that I got from a trading psychologist 10 years ago, and I fought it. I didn't want to do it, and for 2 weeks I fought it, and he wasn't going to work with me anymore. So I finally bought into it. But I found that emotion, like when you're buying highs and selling lows, there's information in there that you can use. Like, okay, it's telling me it's time to act. There was a trader that was standing behind me and just watching me buy every high, sell every low, buy every high, sell every low. I'm like, this is ridiculous. What is going on with me? And he poked me in the back, and he didn't even know me. And he says, "You have no idea how good you are at this." I said, are you freaking kidding me? I bought every high, I sold every low. He says, "No, your timing is amazing. Your direction is wrong. You should do the opposite of everything you think you're going to do." So I think I gave him a shot in the gut, and I walked out of the pit, and I thought about it that night. And I said, you know what? This son of a bitch is right. He's right. There's information there. That emotion is telling you it may be time to act, but not giving you direction. Think about the direction next time. And in this emotional journal, I found the same thing. Trades that were a little bit scarier, a little bit more emotionally charged, had a higher probability of success than trades that were layups, or that I thought were layups.
Oh, interesting. Can you elaborate on that?
Okay. Jim Dalton says, excuse me, just 1 second, Dr. V. I just want to say, it looks like we got to our target in crude oil. We just put in a new
Yay!
session high right at the end of the day, at least on 3 of them. Gold is just really kind of bouncing off of the recent lows. Equities have kind of fallen into range a little bit. Just taking a quick look at the markets here for us, Dr. V. And, don't forget, we're going to get to some questions, hopefully really quick, and hopefully soon. Don't forget to put your questions in. Hopefully, some of the things that we're talking about are speaking to you and bringing up some questions. And I know Dr. V is looking forward to answering those. Dr. V is the expert. She is, when it comes to trading, she is She-Ra. She is Xena the warrior princess. She's a good trader, very aggressive,
Yeah.
very good trader. So she's gonna have some really good answers for everybody. So I apologize. What the heck were we talking about?
So we were talking about the emotions, like when your colleague told you,
Okay.
that made you resonate and maybe say, like, the best trades are the one that feels a little bit uncomfortable.
Yes. Yes. And in doing that emotional journal, that was one of the first patterns that I noticed was, because you're supposed to kind of as quickly and as with few words as possible. I actually created a bunch of hieroglyphs so that I could write all this down without focusing too much on writing and focusing on the trading. I'm not a very active trader, so it's not like I'm writing 50 of these every day. But I started noticing, okay, before the trade, mentally, physically, emotionally calm. Okay, no problem. That tells me that I'm pretty confident in this trade. At entry, what changes mentally, physically, emotionally? When the trade is on, what changes mentally, physically, emotionally? At exit and afterwards, the trades that I was at least a little nervous or at least feeling a little nervous in at least one of those one of those three categories, two categories would be better, were usually better trade locations with more manageable risk, but a little bit scarier of a trade. The layups, the ones that I thought, well, this is an obvious setup where I was confident in it, there was a lower probability of success. Now, you could do this without doing the emotional journal, but the whole idea of the journal is recording all of this in real time, and then at the end of the day, read through each trade and feel your way through each trade,
I
so
love
you're
it.
living the trade twice,
I love it.
and
It's
then
it's
and then just
the mind
move on.
body approach. Yeah. It is exactly that, because this is data too. Because there
Yes.
is behavior involved, not only technicals. So we need to journal that behavior too, the feelings. And why I love the mind body approach so much, it's because the body knows before the brain. And the body cannot lie to us. The
No,
brain can, to protect itself. And I don't know, I came
body
across,
cannot lie to us.
sorry?
The body cannot lie to us. I like that.
No, we feel stuff. And we need to become expert at knowing what's inside, what are the internal battles, what's going on, right? And when you talked about self-image earlier, like, I would like to know in the chat, give me a one, okay, if you saw that in your trading too, when you started to take care of yourself, to show yourself a little bit more love, how did maybe it impacted positively your trading? Because I really think that the market exposes stuff for us. And because of the markets, we become a better version of ourselves. Like the butterfly is just a caterpillar, and then it goes into that very ugly stage, okay, confined in a small cocoon, and it's not pretty, right? And then it becomes a freaking butterfly, but nobody would have guessed that, seeing the
Mm-hmm.
caterpillar.
Mm-hmm. Mm-hmm.
But so that corridor of pain, so we have to go through it. It's not fun, it's ugly. We will, I don't know, like, have stuff coming to us. Like, what the heck is that? I thought it didn't matter to me anymore, you know? And I mean, for me, the market showed me self love. How crazy is that? I never thought like the financial markets would tell me, like, hey, you should pay attention to yourself a little bit more and start
Right.
caring a bit. Yeah, you know what I mean?
Yeah. Do you? I mean, a lot of people say emotional control is very important in trading. I find that it's difficult to control emotions, but you can learn a lot from them. You control your actions, but it's hard to control emotions. It's exhausting, isn't it?
Yeah, and it's not the goal. It's not to control them, but to be aware, to observe, and let them express. I came across the work of Ed Sekoda, okay, one of my favorite
Okay.
traders of all time, okay.
Uh-huh.
I didn't know he was such a pioneer in trading psychology. So he had his little tribe meetings on a weekly basis where he would gather with traders and they would express their emotions. And I do that with my mentees. We have our sessions where we just let the energy exit the body. So emotions, they come as messenger, they have a message for us, and then they need to leave. It's only energy. But when we keep the energy inside and we we don't know how to express, or we don't know they're even there, then it builds up and we enter like an internal conflict. Our mind wants something, but another part of us wants the opposite. So it's very important working with emotions. What are they trying to tell me, and how should I let them exit my body, express, right?
And how?
And
They right?
finding how. Yeah, exactly. So Hugh, that you've seen it all. I mean, what would you say to us? Um, what makes a successful trader? Like, what the successful traders have in common from your experience?
One of the best traders that I know that started from basically nothing and built himself into one of the biggest traders in the S&P pit gave me some fantastic advice one time. I asked him, I said, Steve, how do you trade so big? How did you make so much money? And he said, Hogue, that's the wrong question. To which I answered, well, what are you talking about? He says, when I started trading, my goal was to become a good trader, to make good trading decisions and consistently as I can, good trading decisions. He started trading one lots, flipping one lots by the time I was in the S&P pit. He was trading 20s and 50s and finished his career trading 50s, hundreds, and possibly even more. He never focused on the money. He focused on the process. And that's what we've been talking about, how profitability is that journal and that process is the path. Probably one of the most important bits of advice I ever got was you focus on the money, and this is one of the paradoxes. You focus on the money, it's never coming.
Yeah.
Yes. So we do have some questions.
Yes, let's go.
Let's take a look at them, and because I could sit here and chat with you all day long.
Guys, thank you so much again. Thank you so much for hanging out with us today. Give some love to Hogue. I mean, we're so lucky to hear all of this today.
You are too kind. You are too kind. We've been posting your Instagram in the chat, so people they're gonna know where to find you. So you might be very busy soon. Who knows? You're not already.
Love it.
Oracle's Flame asks, so I've gotten better at accepting loss, but I have a real hard time not allowing my bias to be changed when listening to others who may have a different view. Advice on this? Always get that skew when you're listening to others.
Shut your ears and open your eyes. Because the markets, they talk to you with charts. So turn everything off. Okay, and I'm reading Market Wizards for the second time now. And one of the traders, I don't remember who, said he was just not listening to noise. He was just watching what was in front of his eyes. And this is what you have to do. You have a system, you have a hypothesis for the day, you have a setup that you, based on your analysis, have a higher probability. Then you go with your process and your plan. Because there's always somebody else on the other side of your trade. That works. If I'm short, somebody's long. That's how it works.
Yeah, so, that's the beauty of futures, isn't it? For every long, there's a short. It's the difference of opinion that makes markets move. Makes market move. All right, thank you for that answer, Doctor. Does mindfulness trading change for those of us who are neurodivergent, trauma sufferers, or survivors of TBI? I'm not sure what TBI is.
Brain injury.
Oh, okay. Does mindfulness trading change for somebody who's again neurodivergent, trauma sufferers, or survivors of TBI?
I have a mentee in my group right now that has very strong epileptic seizures. So he's always like very, it's part of his life. It has been part of his life. And yes, for me, mindfulness is so powerful because it helps us rewire the brain and have more focus, yet more distance. And also, it helps reconnecting the body with the mind, right? So, for any condition, I would recommend mindfulness, like every day, a couple of minutes. I do it every day, at least for 5 minutes. This morning, we did an exercise on the stop loss, on getting used to the pain of losing, but that's another exercise. But yeah, try to find some minutes in your days where you can just sit down and just be and just feel, and it's going to help your trading in so many ways.
Now, Dr. V, when you talk about mindfulness, are you talking about a meditation where your mindfulness is really focusing on having nothing on your mind, being in the moment?
Yeah, it's exactly. So thank you for that distinction. Very important. So mindfulness means being mindful, right? So we are in the present moment. Trading requires that because we need to trade what's happening right now. Okay, of course, we take past data to analyze and make trading decisions and anticipate and see, like, I'm interested in that level, but we need to trade what's happening and not what we think or heard will happen. So mindfulness trading, being in the present moment, then meditation, okay, is accelerating that process for you. So you get yourself faster in that mindfulness state. It's like a muscle because it's attention driven, right? We put the attention on the here and now and we stop the noise in our head. So meditation is just a way,
An
to
exercise.
Yeah.
An exercise to get more mindful while you're trading. I remember, I don't think I've really felt this much since being on screen trading, but I remember being in the trading pit and being so in the moment that 6 hours would pass before I knew it, because you were in a zone.
Yeah.
You were probably trading well. You were focusing on what was happening now. And before you knew it, you were up money and the day was over and you're like, oh my God, where did the time go? Because you're so focused on what you're doing. But I also remember the second you think, wow, I'm really in the zone, you're out of the zone.
Exactly. Yeah, totally. I love that.
You're
It's
out
like
of the zone.
I'm sure you felt like some kind of a trance, right?
Yeah. Yeah. And time didn't matter. It just didn't matter. It was, what
Wow.
was in front of me now? What were the opportunities, get in, get out. I mean, before you knew it, 2 hours, 3 hours, 4 hours had passed and you had a stack of cards and a stack of money on those cards. But I don't really know that I've felt that so much on screen because, I mean, you're not in that environment physically, you're in it visually. So it's been a while since I've kind of felt that kind of in the zone. Plus, I mean, my trading's a little bit different than back then, but it was quite the feeling. And then the second you said, man, I'm really in the zone, you knew you screwed up. Well, there goes the zone. There goes the zone.
It's like when you throw a ball and you start thinking on how to throw the ball, right? I'm sure
Right.
it won't be the same the second time. And speaking on, like, you were trading with the other side of your trade, right? We're talking about if I'm long, there's a short. Well, your short was in front of you, right? So
Oh yeah.
the guy was there. You could see his face. Was he
Yeah.
sweating? Did it look happy? So you had kind of an idea of if is your trade a good trade or not, right?
Yeah,
So how? Yeah, go ahead.
yeah. The biggest part of that face to face trading was, number one, you could see all the orders coming in. You could see what Merrill Lynch was doing. You could see what Goldman, Morgan. You could see what all the major banks had done that day, and you could look around the pit and you could kind of get a sense of the pit community, the locals, whether they were too long, too short, anything like that, and you could start to kind of get that sense. You could feel it in their eyes if they're short and the market's rallying and it's getting close to the end of the day. You know that they're going to have to cover because they want to go home flat. So you start buying and buying and buying, and pretty soon they're screaming so that they can get out of these losing trades. There's one thing that we don't have on screen. So we try and find tools that will help us. I call it pitting time frame against time frame, the longer time frame versus the shorter time frame. And there's tools that we look at to kind of get that feeling, and sometimes they're great and sometimes not so much. Delta is one of them, and by the way, we are seeing a little bit of delta divergence in the S&Ps now. We're up near the highs and we've got negative 4,200 in delta. That might be something to think about as we get into the last hour of trading. So we had the number come out. We've been putting in higher lows, even highs. We're at negative delta up against the highs. This is one of those situations, Dr. V, where I would be thinking, all right, we may have been seeing some longer term, bigger buyers in here, and those buyers aren't buying from each other. They're buying from us. There may be a lot of shorts in this market, and those shorts are going to want to go home flat. We could see that squeeze at the end of the day today, Dr. V. I don't know, but it's one of those tools where I can start to see that the local community, the shorter times, weaker hands, pea shooters like all of us, might be stuck a little bit short and need to squeeze out of those into the close. Anything can happen. Watch and see. We may see that squeeze at the end of the day. I just noticed we've got that divergence in the S&Ps. Could be an interesting close. Last question. Colin is asking, why can't I simply not trade? What should my mindset be when I think I'm over trading?
So again, these questions are, I never feel satisfied answering them because I want to know what is your answer to that. So why are you over trading? First, we need to understand why is that, because it's different for everybody, I think.
I'm going to answer for him. Maybe this will help kind of lead your answer for you. I overtrade because I think that every market movement is an opportunity, and I can't make money if I'm not in the market.
Okay, so the thing is, in trading, we do the most doing by not doing anything. So we have to understand that trading is very boring. We get to trade when we have a setup. So we don't take trades, we take trade plans. Okay, so if you don't have a setup, you don't have a trade, and you don't sit in front of a screen because it's not a casino, right? It is real, it's a job. Becoming a trader is like any other job. Okay, so if you find yourself still having this gambler's mindset a little bit, you have to go back to sim and just practice on becoming very good at one strategy. And remembering that every time you click the mouse, you're risking capital. Yet our first job is to protect that capital, because no money, no party, right? So we need money to be a trader. So we have to think of that. Maybe not every trade opportunity is a good opportunity. And also, I'm pretty sure that you approach trading to become free, financially free, have more free time. So why sticking to your screen all day when you could have one good trade and then have some fun? So again, another question, why trading for you? Right? Why do you want to become a trader?
Right, right.
And some people will overtrade also because the stop is too tight. So they re-enter the setup because it's still valid. So
That's
have a
right.
proper loss, you know?
Yeah. Think mean over trading. What's the root of all evil in trading? There's a few of them, like ego, fear, greed. Greed probably has a lot to do with it. If if the market's going to move, I'm going to make money on it. Patience is so important. It is so important. Doctor V, this is going to be the end of our session for this time. I'm always looking forward to having you back. Let's get that booked as soon as possible, and let's have another sit down before we have the next one. Is again, I enjoyed it very much.
Me too.
Any final comments that you want to embark to our traders before we end this the session here today?
I mean, be patient with yourself, be curious, have fun, right? Trading should be fun. You're learning, you're finding your stuff, you're finding your path. Remember, profitability is not a destination. We will never get there, right? But we will get better at it. And I would like again to thank you so much, Hogue. We need another session. I have so many questions that I didn't ask you today. So again, thank you people for coming with to hang out with us. And thank you, Hogue. Again, was amazing.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will go over how to add multiple instruments to the same chart for an easy comparison. Currently, we are looking at an ES 5-minute chart. We can see it in the background, and we can see it in our information area, and we can see it in our search field. Let's say we want to compare this to how the NQ is moving. Perhaps we do not trade the NQ, but the NQ tends to move faster than the ES, and it might give us a potential direction. So let's click this add. You can see it says compare or add symbol. I'm going to pull this up. Here's the NQ. If you don't have it in your list, you can simply type in NQ and it will show. And here's the important part. You want to choose new price scale. This would be a pane below, and this would be the same scale, but it would show you based on percentage. The best one, in my opinion, is the new price scale. By adding it, we'll see what happens. It added the NQ on the chart as per this orange line, and the price scale is on the left. We can see they are now labeled NQ, and on the right is ES. Well, we would like to see regular type of candles, and we don't want to see them overriding each other. We would like to see them a little bit separated. So just for the purpose of this video, since the NQ price is higher than the ES, we're going to move the NQ to the top of the chart and the ES to the bottom of the chart. First thing we need to do is to choose the price scale. For example, the ES, I'm going to click and drag. We can see it, we're moving it, but now this price scale in the ES is selected. Now I can grab the candles and actually drag the entire chart down. For example, now I want to move the NQ to the top. So I'm going to grab the NQ price scale, drag it, and I'm going to move that up a bit as well. But I also don't want to see a line. I would like to see candles just like the ES. So here, up in our indicator area, we go to settings, and notice it has a line and the colors. Well, I can actually choose candles. And what this does by default is it uses the same colors, but it reduces the depth of them. For example, this is a lighter green than the ES, and is a lighter red than the ES for a little more differentiation in case they tend to move over and cross over each other. But feel free to change these however you would like. If you would like to make the body of this blue and the body of the downs orange. For example, now they really stand out separately and you can adjust accordingly. This is a very interesting way where we can tend to see, let's move this to the top and let's move this around here. So we can tend to compare and see how the price action is working between them. Now let's add one more to the chart, just for testing purposes. Let's add the YM. So I do have it in a list, but I'm going to search for demonstration. I go to the Dow, the YM, new price scale, and we'll notice that it adds a line. It made it blue, and we can see it's highlighted. So this is my blue. So let's first make these into candles as well. Candles. And notice it defaulted back. So let's take these here and let's make these purple on the top, and let's make these let's choose this pink on the bottom. So this is a little different. You can set these any way you like. Point is, it's nice to have them different so you can see the differences between them, or you can just simply choose a line chart. So let's choose actually an area chart. So then we have an area chart. Now this may actually look better on the bottom. So let's shrink this down and move it to the bottom of the chart so we can kind of see what the YM is doing without interfering with the other instruments. There's our YM. Here is ES. We'll move that a little bit higher. And we change our NQ like this. Now note that all of these are on the chart, but what we have in our order panel, we have our chart linked to blue, and we have our order panel linked to blue. So this is going to make any trades on the ES, which is our main instrument where we started. To remove the extra symbols, we just simply close them out. Close the YM, close the NQ, and we can use this A right here, and it will bring the data right back to the screen just like it is by default. Hopefully that gives some assistance in comparing multiple instruments.
All right, folks, it is time. The boss is here. It's time for Mindset Trading. Rob and Dayne in the house. Her resume is so long it would take an hour for me to read it. Just talking over some of the finer points here. She is a trained in neuro-linguistic trainer. She's coached thousands of traders. Was an in-house coach for the best traders at Tudor Investments. Coached many of the best traders in the business, even worked with Anthony Robbins for many years. And the subject for today is why losing needs to be your best friend. Robin, we're all very excited to have you back here, and we're just excited to hear what you have to say to us. How are you today? How's it going?
I'm really good. I'm really excited. I need to get into the room faster so we can have a full hour for you guys because everybody asks me so many questions. But let's get going right into the swing of things. And I'm going to try to make this entertaining at the same time because this is our favorite subject. Not. Okay, so losing, when we come to trading for the first time, we come with a lot of baggage. The baggage can be good, the baggage can be bad. So if you've been successful in the past and you were an athlete or you're an overachiever, A-type personality, all that comes to the table when you come to trade. The problem is you're not prepared for what losing can do to your mindset. We are not conditioned to lose. We are conditioned to win. And so when we have our first losses, we think something must be wrong. But losing is part of the game. That's why I titled this, Making It Your Best Friend. The less emotion you have around losing, the better it is. So I'm going to give you some tips along the way to make losing your best friend. When you master this, your trading becomes much easier. Your emotions are more in control. You sleep better. You don't beat yourself up. You don't do all the things that losing brings to the table. We're just not used to losing. So especially if you're successful. And a lot of the people that answered my questionnaire last time, a lot of them it looked like they were retired or semi-retired. And so they were very successful to come to trading with a portfolio, a good size. And they go into shock with losing. It's a very humbling experience. It will bring to the table, trading brings to the table all of your emotional crap, and we have to deal with it. So we have to minimize it. So the first thing is, I saw a lot of people, again, through the questionnaires, it was consistent that they didn't have a plan to start the first day. And if you start the first day with a losing trade, it sets you up for the rest of the day to be losing. So you wouldn't send your dog out like this.
Mm.
You'd have to take the rollers out. You have to be prepared. So I always suggest, and this is a tip, you want to set your first day up as a winning trade, no matter what, even if it's small, because it sets your mind in the pattern for winning the next trades that are coming up. So prepare and set up a plan. You want to know your levels from the night before, your levels for the day, your overnight levels, any of your criteria. You want to do a checklist, look through them, make sure you're all set up, and say to your mind, this is going to be the best trade of the day. And just set your mind in the right mindset. I also tell people not to trade, and I have some people that push back on this. You don't want to trade the first 15 minutes. The first 15 minutes, the hedge funds have all their orders from the night before plowing into the system. And so it's very erratic. It goes all over the place, and you can get really caught. You can win, but you can get really caught. So I always suggest at least wait 15 minutes and determine if there's a trend. The newer people that are just starting, 1 to 5 years from my surveys, you definitely want to be going with the trend. But today was very unusual at the end. I was seeing it just before I came on, and everybody can't wait to short because of how high it's gone. And we go into the place of it can't go any higher. It can't go any higher. And so my picture for that is, oh no, it can't go any higher. But
folks, just let me interrupt you for just a second, Robin. Folks, get your questions in the chat. I know there's a lot of questions that come up as she continues to talk. We're collecting them, and we're going to get to as many as we can at the end of the session today. So, Robin, I apologize. Please go ahead.
Okay, let's do that. We'll get into this routine when I come on. It's a lot easier. So, again, don't think it can't go any higher. Don't think it can't go any lower. When you go into that mindset, you must find some kind of indicator or level that's predominant from what you're looking at in your criteria to decide where it's going to go. The challenge is when we reach new highs and there's nothing to measure. But you should be measuring levels, key levels. Fibonacci's are really good when you have a big long move like that and the retracement starts. Then the fibs come in really well there, and you can get some good information. Or you're going to have just a minor retest and then it shoot up again. So you have to be careful of that pullback and then shooting up again. I call those pullbacks when it's really strong, in like today, in a long direction as a breath. The market goes up, 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 up. And it breathes up, 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 and it breathes, because all of the buyers are now sellers, and it causes the breath. Take your profits. You can always get back in, but don't assume it can't go any higher. So losing, you want to stay centered. I'm going to give you a game. I call this the trading game. If you've been losing, pick a number that you can trade, how much you can win in the day, a number you can win in the day. I don't care if it's $200. I believe you have some mechanisms in Topstep to put some parameters in that will stop you. Set a goal you know you can make. Get into the trade. When you make that goal, You have one more trade left. If it's profitable, you can continue trading. If it's not profitable, you have to stop. You have to stop. This is where a trader has a really hard time because they're really pulled into the market and they can't stop. But this exercises your strength and your discipline. If you have a winning trade, you can continue. I want you to trade if your trading is on. I don't want you to trade if your trading is off. So you get into the game, you set a goal for the day. If you hit that goal, you're allowed to continue, but the trades after that must be positive. I don't care if it's $5. That allows you to stay in and win and take another winning trade. And it also, if you stop in the moment, that will reset your mindset in that moment to slow you down and not rush into the next trade. Because another thing that I saw in those surveys were people were rushing. I call it pushing. They push into the next trade. The fear of missing out overwhelms them. They want to go in, and it's the addictive personality that's taking them over. You can't afford that. If you're going into that mindset and addictive behavior, you're going to lose because your subconscious memory has a block and it's going to pull you into that trade. And you want to fight that. Mr. Market says, oh, Hogue, I'm going to take your money. I'm going to do that by making you feel an emotion. And I'm going to give you the emotion of desire. Desire is as powerful as fear. Your desire to get in, to get back the money, to get back the losers is as strong and powerful as fear. So a tip with that, if you have, this is the next game. So you've got the game. You hit your goal. You're allowed to take a trade, but if the trade is negative, you have to stop. You can go into simulated, but you can't trade into that account anymore. If you make that trade, you're allowed to continue, and you can continue if every trade is positive. This gets you in a losing streak and has you winning. You have the tip of setting the first trade of the day must be a winning trade, even if it's small. Make the first trade winning. Okay, the next tip is on losers. If you have a losing trade and you're new, even if you're an experienced trader, but you're having trouble with losses, you must stop after a losing trade, examine it, and then find the adjustment, change it, test it, and then go in again. The time it takes you to analyze that error is going to do a few things. It's going to make you either determine a new rule that you mustn't break. It's going to slow you down mentally so you don't get into the hooked and pushing mode and taking one trade after another and just keep losing. And it also gives you a pearl of wisdom. I look at my losers as this is the best time that I can learn something. I can get something new. You just heard Alex when he was asked the question, what does he do? And he said, focus. And that was true. Focus is going to do it. And he visualizes and learns. I picked that up. This is not just for trading. This is for everything. If you want to learn quickly, then examine the loss immediately when it happens. Most traders do not do that. It's not easy to do. It's really not easy to do.
It's painful.
It's yeah, it's painful. We don't want to look at our mistakes. That's why you have to embrace losing. Oh boy, I'm going to get something new. You don't want to go into this. And you don't want to hide. Losers are there for you to find something, not hide behind them. So examine your losers. Last one on losing. At the end of the day, in your journal, write down 3 new things that you learned today about your trading. 3 new things. One-liners. Doesn't have to be a book. 3 things that you learned today. In the morning, reread that list. 3 new things every day. Write them down. Reread them every morning. That gets it into your mind as fast as possible and has you remembering. I have traders that are doing coaching. They said, but I'm not going to remember that. I said, repetition is the mother of skill. The more you repeat it, the more you'll get it. That's why writing it down when you see it and you feel it and you say it, even talking it out loud is better. You're going through all your senses. Your mind is accumulating information based on your senses, your eyes, your ears, your touch. So you want as many to go in there as you can in a positive way so that you can replicate that and it becomes your autopilot and you do it automatically, like getting in a car. You don't think about the keys, you just do it. Okay, questions.
Okay. When you talk about, journaling and going through the trades immediately after, it is a hard thing to do. A lot of people say that they're going to do it. Maybe they start to do it, but it's a practice that they don't enjoy. Maybe they don't want to do it, even though they're pretty sure that it is going to help them in the long run. What do you say to somebody that, says they do the homework, wants to be successful, but just doesn't take that step to do what's necessary in the review of each trade? And we all say, losses are tuition, right? They're tuition to learn something. And I like that. But what do you say to somebody who just doesn't want to do the work?
You want to get inquisitive. You want to look at it. Let's say you went into a place and you were getting a computer game and you got 4 spaceships. They gave you 4 spaceships and there was nothing on the screen but your spaceship. And then all of a sudden another spaceship came out and ate you up. And you went, oh, that didn't work. And now you find out there's a rock in the middle of the screen. So the spaceship comes out again, your second spaceship, you've lost one already. It tries to get you. Then you say, uh-oh, I'm not going to do that. I'm going to hide behind the rock. So you hide behind the rock and he tries to shoot you and he can't. So you've got a little strategy and it worked. And then you were able to get a spaceship if you killed the bad guy. So he comes out again, you jump out from behind the rock, you shoot him down and you run back behind the rock. And so you developed a strategy of winning and getting a new spaceship back because you lost the first round. You have to look at this as a game. You want to look at it as, okay, he took my spaceship this time. I'm not letting him get it next time. I'm going to figure this out, what I could do. Get in an inquisitive mindset. Everybody hates to track. Everybody hates to look at a losing trade, but is the best thing to master in moving forward and gain success as quickly as possible. You don't have Alex go down. I think he's skiing, right? Or is he snowboarding?
Yes.
Snowboarding?
Skiing.
Oh, he's skiing. So he's not going to go down a black diamond and go down in the same location with the same strategy if he falls like as soon as he starts. He's just not going to do that. He's going to say, okay, I've got to shift and go in between the moguls, and I have to do it this way to pass that little glitch in the mountain. So he's reading the mountain, he's looking for the error, and he's adjusting his plan for the next run.
Right.
You have to do the same thing. You have to adjust your plan for the next run. The faster you do that, the faster you can take a trade. So I look at it as, how fast can I get this solution? I play the game. How fast can I get this solution? How fast could I see what I'm doing wrong? That's why you need a plan. You need criteria that makes up your plan. You need your checklist. Did I do this, and this? Oh, I missed it. I missed this one. I didn't realize that. I'll do that next time. And all of a sudden you're okay. So you have to attack it quickly and embrace it. And that's why I say making it your best friend, because it's the thing that's going to give you the pearl of wisdom. It could be the one thing that changes your trading forever. Might be in that last move that you analyzed. And sometimes it's that little and you can make a big move forward.
Difference.
Yep.
Very nice. Folks,
Also,
what she's
something that
talking about is the
Alex.
Top Step trading checklist. The trading checklist will get you
Oh,
started
okay,
on that. Yeah.
perfect.
Yeah.
He also said take ownership. You should take ownership of your own trading. Yes, they're going to give you a lot of instructions, but you and only you are in control, and especially of your emotions. So make losing your best friend. You're going to track three things every day, new things, and reread them. You're going to do the game of how much can I make in my day, and are able to take another trade. If you go down, you've got to stop. Never
Uh-huh.
lose in the day what you know you can make. Never lose in the day what you know you can make, or you're always digging out of a hole,
Sure.
and that doesn't work. Next question.
Okay. Um, we have Nate Dogg says it's been almost 30 years. I think he thinks he knows you. He was at TR at the same time, whatever that is.
Tony Robbins.
Tony Robbins. Okay.
He
Got
must
it.
have been in the seminars.
Okay. All right. So
Yep, it's been
Duncan.
that long. In the 80s, unfortunately.
All right. Well, Duncan has a question here. Do you have any tips on letting trades run in your direction instead of closing them out before the profit target because you want to lock in a win?
Okay, that's telling me you have a subconscious fear. You've been losing, and your brain is saying, "Oh my gosh, this is not going to work. I don't know what's happening here." Now, I don't know how many contracts you're trading. Sometimes you can do it with size. You can do it. You can, let's say you took 3 contracts and you move up and you close one out and you let the other runners go. You look at your levels. I'm a big level person. I learn levels from Tutor. um, Levels are your best thing. Where are the previous highs? It has to break those highs as you go up, or it's not going to go. And it will take a breath. So if it's going, 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 breath, see what level it got to. Going, going, going. Did it hit another level? It will hit previous levels to the tick if you monitor them. That can tell you where it's going, unless you're at the high or the low, the highs of the day, and it hasn't made any levels from in the past. That's the only time
Right.
it's a little tricky. And
Yeah.
you
All-time
want
highs.
you want to lock in cash and look at what you normally would do, but don't let greed come in the way, because if you let greed come in and you say, I'm going to stay, and you have only one contract, most likely it's going to go, it's going to take you out, it's going to reverse, it's going to take you out, and you go into the shoulda, coulda, woulda. I should have moved it. I should have took my profits. I should have done this. I would have had this much in my P&L right now, but I held on too long. Give yourself, watch the candles for, I don't know what time frames you're using. I use 5 minute. So I look for, did it break the previous low on a 5 minute or a 3 minute or a 1 minute? Are they breaking those lows? If they're breaking previous lows, then it's probably going to reverse. If it starts to do that, don't stay in. So give yourself a certain amount of time on the reversal on a shorter time frame, and it can tell you to get out a little bit sooner versus having to hold, and not having it work. That's a challenge. But you have a block. It's an emotional block, and it's a block because you've been losing and have lost money. All of
All
these are
right.
going to
Thank
come
you.
down to blocks.
Right. Right. And it's usually about the fear of loss and avoiding pain, isn't it?
There are 35 different fears that traders go through. I'm afraid I'm going to be wrong. I'm afraid I'm going to be right. I'm afraid this is not the right level. I'm afraid to lose more money. I'm afraid I can't do this. There's 35 of those. So it could be any one of those that's triggering your desire to exit too soon. But that's coming from a block that's in your subconscious memory, and it's a fear.
You've got them nailed down to 35.
Yep.
That's a lot. That's a lot of fears. All right.
Not everybody goes through all of them, but it is a lot.
I have a question from Edmund, and He's looking for your view about systematic enough to be reliable and discretionary enough to be adaptable mindset.
Okay, well, you should have a plan and you should have your criteria. You should use that. And I had a trader that I was working with, and he was just the most discretionary trader I've ever seen. And he would fight me all the time on using certain rules. And when you get discretionary, you're going to take the risk of losing a lot. You're going to take the risk because discretionary, unless you have developed over time a good feel for the market, and that
Mhm.
person may have that, a good feel. That's why I have people working on candles and seeing if they can determine the reversal on their own before it happens. Do they have a feel for the market? I suggest always doing one market you trade. Don't switch around because each market has a different personality. You have a different personality. You have to find the one that matches your personality. So if you have a plan and it's working, but you want to be discretionary in the moment, find something that's going to allow you that flexibility. Again, it could be a level, it could be uh, some kind of. I hate I hate traders that want to trade the news or jobs numbers or that's Friday. You don't want to take that chance because it can go all over the place. You can make a lot of money if you're in the right direction. You can lose a lot if you're in the wrong
Uh-huh.
direction.
Uh-huh.
So you discretionary is risky. It's risky. If you have a feel and you have a predetermined amount that you're going to make when you do that trade, like I'm going to be discretionary, but I'm only going to go for 2 points. I don't have a problem with it because you can usually grab 2 points if you're reading the market correctly. If you're not reading the market and you don't, and your system is going against you, you probably shouldn't be discretionary. My favorite thing is the questions. Remember, I told you questions keep your mind out of the emotion. Questions. So if you're in a trade, my favorite question is, what's really happening? You're looking at all your different charts over here, over there. What's really happening? This is working. That's working. This is not working. This is not working. This is not working. If you've got 5 on your list and only 2 are working, you probably shouldn't get in. What's really happening? Keeps you out of the emotion and keeps you focused on your plan. I hope that answered it. It was kind of
I think
convoluted
that's
there.
very good. Yeah, I mean, discretionary. There's a lot of room for error.
Yep.
Systematic is good.
It's
You
fun.
got your setups. You trade them.
It's fun. Everybody loves it. It's fun. There's no doubt. It's fun, but fun is going to cost you. I used to have a guy that had 2 accounts. He had to discretionary trade. He had to. So I said, okay, put a bunch of money in one account, put a bunch of money in your stable account. Trade this one to your rules and put money into your other account and just trade it discretionary and get it out of your system. Lose over there, but keep one account that you're profitable in. And that worked for him. And so I'd ask him at the end of the week, well, how'd you do? Well, I blew up my discretionary. I said, well, how's your
Mhm.
other one? It's doing fine. So when we compared them, he always had trouble, but there's a way. I always believe there's a way. Figure out a way. Okay,
Awesome.
next.
All right. Shubham, our good friend, has a question. Why do I keep repeating the same losing behaviors even though I know they're wrong in the moment? And how do I know when a loss is part of the game versus when it's a signal of a deeper problem? This is a pretty good question, Shubham.
Well, it is a deeper problem, and he does have a block. And so the block is in control. You are not. Your conscious mind, remember we talked about your conscious mind versus your subconscious mind. Your conscious mind is your logical mind in the moment as you're looking at the screens. Your subconscious memories and fears from the block are getting triggered from these 35 different fears. And so his fears are getting triggered, and it's in conflict with his conscious mind. Conscious mind wants to do this, subconscious wants to do this. And on top of that, your body loves patterns. Patterns, patterns, patterns. It doesn't distinguish between what's a good pattern and what's a bad pattern. It only takes the pattern and it repeats it. So it'll repeat the bad pattern. It'll go into the trade and the brain goes, "Oh, I've been here before. Let's do it again." You do this, 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 and this, and you do it again. So you repeat the pattern because the brain knows what it is, and patterns give us certainty, security, and comfortableness.
Comfort.
And that's why the brain likes them. So we do that. So anything that you're doing, even in sports, what do? You have patterns repeated. You have patterns repeated. So if you're going to learn to shoot goals from the goal line, you shoot. Patterns. You want to do 3-pointers, you move it back, you shoot, till you get the feel and it gets ingrained in your subconscious memory and locked into your body. These are locked things into your body. So you've locked in a bad behavior with losing. That's why if you stop, this is the perfect example of why you should stop after a losing trade, to not repeat the bad pattern again and to look at the adjustment, because all of his bad patterns are exactly the same. So by stopping and finding a new approach, now he doesn't repeat the same pattern. That's why doing that exercise after a loss is so valuable. You don't get hooked and pulled in to make the same loss again. And the subconscious memory won't say, "Ooh, whoopee, let's get that pattern again." It loves them.
Well, Robin, you talk about blocks a lot, and everybody has them. I have them. You have them, right? I mean, we all have
Had
them.
them, yep.
How does a person, like, kind of on their own, learn to ferret those out and learn how to take their power away?
Okay, if you never did coaching with me, I can remove it in the session that I do. I remove it in the hour. If you don't do coaching and you want to stay in the game and your block is really bad and you keep losing and losing and losing, then my suggestion is you have to have wins. So I call it tipping the scales. So right now, the scales are where losing is the highest. Got to get on my camera here. Losing is the highest. And you want to have a win, a win, a win, a win. That winning becomes the highest. And you outweigh the losers. That's why I say stop after a losing trade, get a winning trade. Do the trading game and have a win, win, win. If you do multiple wins, repetition, you could shift the block, but you have to have the discipline to do that. And it takes time. When you take that approach, it takes time. So the best way is to reverse it and do the win and lock those in. Also, after you do the win, you want to pat yourself on the back. You said, "Man, I did that great. Yes, I looked at it. Yes, I did that change, and that change worked." And so you want to pat yourself on the back and be your best cheerleader, because the market's going to try to take your money on the next trade. That spaceship is going to come out and try to shoot you down again.
That's why losing needs to be your best friend.
Exactly.
You can learn.
And so you can learn. But, we're just not conditioned before we trade. We're just not conditioned for losing. We're just not. Oops. We're just not. So make losing your best friend. Next question. Let's try to get a couple more in here.
Okay. Mayday Mishap is asking, why is winning more stressful than losing? Like, winning, don't want to lose what I just got. Losing, typical. Why
I
is it
love
more
that question.
stressful for
I
some
love that
when they're winning?
because it because your brain is saying it's not real. This can't be real. I can't be winning. I've just been in a losing streak. I've just been losing, losing, losing. And that win, I can't believe that I won. I can't believe it. So your brain is not accepting it. And so you have to accept it. That's why I say enjoy it, pat yourself on the back, and say, that was awesome. I did terrific. Not push it back because your subconscious memory and the block is trying to hold on to the block and it's pushing back. It's like kryptonite for a loss. A win is like kryptonite for your losing, and it's trying to push you back from the kryptonite. No, 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 I don't want to do that. I know how to lose. I'm not sure how to win. So it's pushing you back constantly. That's why traders get exhausted by the end of the day. There's a constant pull push of the
Push
conscious
pull,
mind
yeah.
and the subconscious fighting each other during the whole trading day, and they're physically and emotionally exhausted.
Robin, I mean, everybody comes to trading because they want to make money, right? I mean, that's the goal.
Right.
But I don't think many people are hardwired to do that successfully certainly not from the very beginning. We're always avoiding losses and creating bigger losses in that avoidance. And we're always cutting winners because we're always afraid those winners are going to turn into losers.
Right.
Uh, but that is, I guess, hardwired on protecting yourself from risk of getting eaten by something or something like that. But when I hear somebody, and I think I've suffered from this as well, to be able to accept the success for a lot of people that you can reach in trading seems very difficult. What is that? What is that fear of success or the fighting away from success?
Okay. Well, you want to change your language and your thoughts. So your words make up your thoughts go into your subconscious memory. Difficult, you say difficult a lot, and you might be just reading the questions. Difficult, hard, can't, um, I don't know how to find a trade. The two worst ones to have is can't and I don't know. That those words are the off switch for the brain. They literally turn your brain off. Can't and I don't know. I
I
hate
remember
when I
this
hear
from last
kids
time.
saying, I don't know, I don't know. Kids say that. So the words that you're thinking in the moment as you sit there trading is very crucial. So you want to think good stuff. You want to think words that are going to pull you in a forward direction, not pull you backwards. Forward direction. How can I win at this trade? How can I make this trade better? How can I adjust that to make more money? Forward, forward, forward. Not how can I not lose at the next trade?
Right.
How can I not lose at the next trade is like saying, don't think of the color blue, don't think of the color blue, don't think of the color
Right.
blue. So what are you focused on? Losing. So
Right.
guess what? You're going to lose. So your focus, the words you're thinking in the moment are critical. Make sure they're pulling you in a forward direction, and you're looking at those losses and say to yourself, great, I'm going to find something really terrific in this one. A great question in that moment is, what's great about this? What's great about this? If you are not accepting losing, I give people an exercise. Take a sheet of paper and on every line, write down why losing is great for you and fill the page. That's a hard exercise. Fill
Mm.
the page. One page, one line each, why I like losing or why it's great for me, why losing is great as a trader. Why? It's great because I'm going to learn something. It's great because it can
Hmm.
move my trading forward. It's great
Hmm.
because when I accept this, I'm not going to feel so crappy. It's great because it's going to keep me out of the emotion. There's so many great things about losing. And so by making it your best friend, and figuring out why, that helps you accept it more. And doing the few exercises that I gave in the beginning, that'll help you accept them more. Because it
Excellent.
makes a difference. Your words, your language, what you're thinking makes up what you're doing. You don't have Alex going down a ski slope saying, I'm not going to
can't
make
do
this
this.
run.
Yeah, right.
He's saying, how do I get to the finish line as fast as I can? How can
How do I do it
how
the
can I
best?
go through how can I go through these moguls and not kill myself? How can I
Mhm.
avoid the tree? You know, he's saying the things that's going to get him across the finish line as quickly as he can. And when he does it that time and he's not successful because he's a perfectionist, he's going to be looking at, what should I have done? What could I have done better?
Right.
How could I have approached the slope differently to get through that one section easier? Easier, not more difficult.
Right.
So he's using words and language, and his self-talk is really good and strong. Next question. We're
Awesome.
doing good on the questions today.
So, you're a trader. You're reviewing your trades. We all should be reviewing our trades. Blake is asking, what is the proper way to review your trades or your trade? What do you do,
Well,
Robin?
that's a whole conversation, a whole seminar. But I review my trades in a way that gets to the quality of the trade, not the dollar amount. If I focus on the quality of a trade, did I use my criteria and did I match my criteria? Did I see those levels? What did I see in those levels, or what did I miss that I should see in those levels? If you're in a room, what did that person do in the room that maybe I didn't do? So if you're in the room and somebody took a trade that worked brilliantly and you couldn't follow them, then ask them what they looked at first, second, third, and fourth before they placed the trade. When I was in the trading room in New York and there were 100 guys there, they used to make me sit next to the best trader. And they said, Robin, okay, figure out what he's doing, because that's my wheelhouse. So I sat there and I would figure out all the steps. When he took a good trade, after it was over, I'd say, where did your eyes go? He said, my eyes go here, 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 and then I entered the trade. And so I saw the pattern or his criteria before he entered the trade. And so by evaluating, did I do the same thing this time, or did I miss something? Or is there something I should have changed? Or do I need to add a rule? Did I break a rule? Because you should be creating a rules list, something you must never do. There are two types of rules. Rules that prevent you from losing cash, and rules that make your trading better. Rules. So one is a dollar amount and one is just something nice to know that you shouldn't break. Like if it breaks a level, you didn't get out. If it breaks this particular low, if it hits this bottom level, then I'm going to get out. And my rule is I always get out, like on a W or an M. And if it breaks the bottom, it's going to drop and you're in a long.
Right.
You get out of the trade. Get out of there. So I broke a rule if I didn't get out at the right time. So there are trading musts and must not do's, and then there's emotional ones. Next.
Okay. Well, maybe next time you come, we can do a whole thing on reviewing trades. It might be something good for us. All right, last question. I think you're going to like this one. You ready?
Okay. Yep.
Crawdads Fish Market asks, is there a mapping out there of personality types and how they match up with various markets available to trade?
Yeah, that's a great question. I always tell people, if they have multiple futures markets that they're looking at, to pick one and match their personality. One is speed. So the type of speed of the market has to fit your personality. You can't take a trade and get all excited and upset when it's going because it's too fast. That's not meeting your personality. You should try another one and see if if you, when you enter the trade, you don't go into immediate stress. So the speed of the market, the length of the move in the candles is also something. In the Nasdaq, you have much longer candles, so you have a little bit more control, versus the ES has shorter candles and things happen quicker, and so you have to manage the quickness of the levels and the candles, and so the length of your candles can make a difference. Speed is the major one. If it doesn't fit your personality and speed, then you probably shouldn't be in there. And you can tell as soon as you get in, you just get anxious. Any emotion whatsoever, you're dealing with a block. Could be a little one,
So
could
if
be a
I
big
were to
one.
tell you that I can't trade the NASDAQ because it gives me heart palpitations, that's a block?
Yes. Yep. Your body is physically telling you shouldn't be in there. I had a trader once that used to place a trade and run to the bathroom, get sick. He was that
Oh, really?
emotionally hooked. Yeah. I mean, it can
Holy
be,
cow.
it's a physical thing. You know, your
Yeah.
mind and your body are attached. You know, when people say I can't sleep, it's because they're perfectionists. They're running with all the stuff in their heads over and over and over again. They're A-type personalities. They're constantly regurgitating the move. I could have done this. I should have done this. You know, you've got to slow your brain down in the moment. Last tip, in the moment, to slow yourself down. You took a loss and you've got to examine it, but you're feeling anxious to jump back in. Stop, close your eyes, take a really good deep breath, and just say to yourself, I'm going to look at what I did to fix it. Open your eyes and go back in. That small break will stop you and allow yourself to rethink what's going on and get you off the hamster wheel, because you're on the hamster wheel and wanting to jump in
Uh-huh.
again.
Uh-huh.
You got to slow yourself down mentally and physically. If that doesn't do it, find another way. Get up out of your chair, go to the kitchen, and get yourself a glass of water, a cup of coffee. I prefer something other than coffee, but do super
Beet
beets is
juice.
also the super beets is a really good
Beet
thing out of
juice.
Walmart. It's really
There you
good. It's
go.
beet juice, but it tastes good.
Yeah.
Yeah,
Uh,
super beets.
Robin, what's going on behind you there? Is that a Target you got behind you?
Yes, I did. Was it a volunteer for the Las Vegas Police Department, and they took me to the range, and uh, the guy who was teaching me, it's the first time I had used the Glock, and he brought back. He was looking at my hands because he was watching me, but then he went to get the target, and he brought it back, and he goes, "Oh, okay. So how long you been shooting?" I said, "This is the first time I ever shot." He says,
Ah.
"No way." He says, "No way." I said, "No." He says, "Seriously, how long you been shooting?" I said, "This was the first time I used a handgun." He brought all the guys around. I learned probably in my 50s that I have an immaculate eye. My eye is a perfectionist. So I worked at an art gallery. I could tell you if a painting was off, even if it was a fraction, I could tell.
Ah.
They'd say, "No, it's
Ah.
fine." I said, "Put a level on that painting, it's off." I was great at shooting pool. And so I was great at targets. My father always brought me to the fairs and had me shoot the ducks at the fair, and I
Uh-huh.
always won
Uh-huh.
as a kid.
Ah.
I just have a really good eye, and that was from my first time shooting. So they
Well,
signed it. He
folks,
says, "Don't ever
she's
come
the
in front of my
boss.
house."
She's the boss. And
Yeah.
apparently she does not have a block when it comes to sharp shooting.
Nope.
Very
I
nice.
love that,
Well,
actually.
Robin, we can't tell you enough how much we appreciate you coming, and I'm really looking forward to the next time you come and join us. I know that everybody got a lot out of your thoughts, and thank you for answering everybody's questions. And let's do this again real soon.
I love
What do you
coming.
say?
They can do more surveys. I forgot to mention all the surveys from last time finally got done. If you didn't get them, check your spam, and you can do more surveys. But anybody who answers the question and goes into what I call the I don't care zone, they lose and they freeze, you definitely need to do work with me, because that's a very dangerous place to be trading from.
Yes, you
The I
never
don't
want to
care zone.
capitulate.
No. And they
All right.
just
Well,
get in the trade and they just watch their money disappear.
we've got your website pinned to the chat, so
Okay.
you'll probably be getting a lot more surveys. And we certainly appreciate, Robin goes through those one by one personally.
One
and
by
goes through
one.
them all. That's just truly amazing. You're an amazing person. We really loved having
Well,
you
thank
with
you
us.
so much. I love doing this. I love trading, and I love being able to help traders get to the next level. That's what I enjoy this. And be careful when
Awesome.
you
Well,
have those long moves like today. Be careful, because the turn or the continuation is really the question. Don't take a trade if you're never trade when you're uncertain.
all
Have a
right.
great day, guys. I love you.
All right. And we love you too, Robin. Thank you very much. Folks, Power Hour's coming up next. Baron the Man is going to be back with Andre and Gabe. Looking forward to seeing you all there again, Robin. Thank you very much. We love you very much. This is
Bye-bye.
Top Step
Signing
TV.
off.
Let's go.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will review the contract limits feature. To access this feature, you go to the settings gear on the left side of the platform, and it is under the risk settings tab. Toward the center at the bottom, you will see contract limits. With this feature, you are able to choose the symbol and the amount of contracts you would like to limit trading to that symbol. So for example, let us choose MNQ, for example, and let us limit to 2 contracts. We need to add the limit. It will show in the summary area below, and be sure to save. Now let's go and check the MNQ instrument. We will go to our trading area. We switch to MNQ. And what I'm going to do is add 1, add a second, we have 2, and now if I add a third, notice it will not get added. Okay, so let's remove these. The same holds true for placing orders as limits or stops. So if I wish to have a market sell, meaning to short once the price reaches a certain level, I can choose to a limit sell of 1 contract. I can choose a limit sell of a second contract. And now if I try to add a third, notice it will not allow me. Now I can actually add a buy as well. Or a limit buy. So if the market comes down, I will enter a buy and a second buy. But notice I am no longer able to add a third buy. The reason this is available is when you have bracket orders, we need to have a position, as we can't add since we have all used up. And you need to have a target and a stop associated with that position. So if I remove one of the limit sell and one of the limit buy, I can now add a position, and I can actually take and set my limit order and my stop order according to this particular instrument in this position. Now if I try to buy one more, notice I am unable to unless I remove my other positions. Now I am able to add. There's our second. We try to add a third. We can no longer add a third. This is a really handy feature if you find yourself over trading or you want to restrict instruments. So let's say NQ, you want to limit yourself to 1 contract, but MNQ, you want to limit yourself to 20, which would equal 2 NQ contracts. And you can choose that very easily by adding another contract and setting a limit, adding the limit, and saving. Now, if you find yourself wanting to change these throughout the day, you can simply lock out these risk settings for the rest of the day, and you will no longer be able to change these areas. So I'm going to do that right now. I'm going to remove the NQ and the MNQ, and I'm just going to add a symbol that I am not going to trade. So let's take the M2K, add a limit, save, and lock out my risk settings for the remainder of the day. Yes, lock me out. This whole area of risk tab under the account risk settings is now locked out. We can see the timer. I can no longer make changes. This is a really handy way to prevent yourself and stop yourself from potentially making bad choices, whether you're under stress or what they say going on tilt, or find yourself wanting more once you have reached your targets. This is a really great feature, the contract limits feature in TopStep X.
Welcome, traders, to the Power Players segment, and we certainly have a couple of real power players today. We know her, we love her. Anne-Marie Band is the president and CEO of TheTradingBook.com, also the chief market analyst, background in mathematics and neuroscience, been a futures trader for over 20 years, and she is the author of The Trading Book. I keep it right here on my desk, and now, perched in the middle, right
nice.
between us, is Dr. Brett Steenbarger. If you don't know him, you better get to know him. He is Dr. Brett Steenbarger, Ph.D., a professor of psychiatry and behavioral sciences at SUNY, Upstate Medical University in Syracuse, New York. Specializes in short-term research-based approaches to making life changes. We're all working on that all the time, right? A stock market trader since the 70s, Brett began applying these brief therapy methods to market makers and prop traders in Chicago in 2003. I actually know a couple of them that you have worked with, Doctor. Since then, he's worked with a number of hedge funds, banks, all written several books on trading psychology. This one I also keep very close to me on my desk here in enhancing trader performance. Wonderful to have you with us, Doctor. Wonderful, as always, to have you with us, Anne-Marie. How are we feeling today?
Thank you very much, John. Well, I'm feeling shitty, let me tell you.
Oh, no.
Well, yeah, I go on, well, it's not Twitter anymore, it's X, right? So I go on and I see this tweet announcing that I am the godfather of trading psychology. Hey, let's make me feel old, maybe, okay? So, it was funny. It was a while ago. Something was going on in the markets. We had a real plunge, and I just lightly commented that it reminded me of something that had happened in October of 1987. And the young trader looks at me, is like, dude, I wasn't born then. So reminding me of my age. Anyway, it's great to be here. Thank you.
I was an ARB clerk in the S&P pit during the crash of 1987. I wasn't even at risk, and it was scary as heck.
It was scary as heck. It really was.
I'd love to jump right in and ask you the big question of you've been so active for so long. Is it true that people are really the same, or have you seen them change over time in terms of their responses to the market in general?
Yeah, it's a great question, Anne-Marie. People haven't changed as much as markets have changed. And markets have changed in a couple of different ways, both in terms of what trades and how it trades, but also in terms of market participation. I was just talking with a portfolio manager literally just an hour ago about how much expansion there has been in the trading universe. A lot more traders pursuing all these different markets. And it certainly has occurred in hedge fund land with these large multi-strat hedge funds. And so as a result, you have lots and lots of people who pursue opportunity after opportunity, but they can't really afford to lose money. And so there's chasing into markets and there is scrambling out of markets. And that has changed how markets have moved, and that affects traders. So it's not so much that the traders have changed as the market environments have really changed for them.
Do you feel as though that when COVID happened and everybody was kind of working from home or just staying home, that had a lot to do with bringing a lot more participants that are perhaps a little bit underfunded into the marketplace?
Yes, that's a really good point. I did notice that many people stuck at home. What are you going to do? So they start pursuing the day trading markets. That has definitely occurred. And then you get the rise of meme stocks, and you get bull markets, and that attracts participants also. And so what happens is they get into markets, they lose money, they become frustrated, and then they look to people like Anne Marie and they look to people like me to try to get some help for this. One of the things I mentioned in my tweet was that the format that I would like to follow today is not so much AMA, ask me anything, although you can ask me anything, but AMA, all my answers. Because it turns out that most of the time, we have the answers to our trading challenges within us. But out of frustration, we don't identify that. There's a tradition in what's called positive psychology of what's called solution-focused thinking. The usual psychologist will look at problems and try to analyze why problems occur and see what you could do to help those problems. If you have depression, if you have anxiety, and here are strategies that could help you with those. The solution-focused psychologist is looking at occasions when problems are not occurring. So if you have a trader who is getting overly emotional and they're getting impulsive and they're making bad trading decisions, okay, when does that not happen? When do you find yourself trading with a relatively level head? How are you able to do that? Let's reverse engineer the exceptions to the problem, and then let's do more and more and more of what works. So that's why I say, instead of ask me anything, all my answers, let's figure out what we are doing uniquely when we are profitable, when we are successful, and let's see if we can build a business out of that.
Fantastic.
You have such a positive mindset, sitting in a space where there's so many times that, we face defeat in terms of working through our particular setups or particular execution or that sort of thing. Where do you find the fuel to fill up that tank of positive mindset to share with so many people? Because in preparing for you, I literally sat and watched so many videos, and the one thing I noticed was always upbeat, always on point, and always solutions focused, right? So where did that come from?
It's a good question. It's been a framework I've worked with for quite a while. The idea in markets is that if we are trading responsibly, and that has a lot to do with our risk management, or sizing of positions and so forth, then every loss that we take can be an opportunity to learn. In other words, as a developing trader, I won't always have a positive P&L, but I can always have a positive learning P&L, because the losses are there for a reason. The losses are there to teach me something. However, if I don't manage risk properly, then the losses can traumatize me. And that's a very important concept. We know a lot in psychology about traumatic stress. And so we take losses that are too large. We go through anxiety, we go through frustration, we go through self-blame. And it's the nature of traumatic stress to repeat again and again and again in similar circumstances. That's what we mean by PTSD. Many traders who are dealing with emotions in trading have unwittingly traumatized themselves. And they need to get back to trading small and safely and getting back to that learning curve.
That learning loop. Doctor, I haven't had the opportunity to read this online blog book, Radical Renewal. You mentioned the topic of spirituality and the spirituality of trading. I would imagine that is something that has really helped you kind of maintain that positive attitude. Can you talk a little bit about that?
Yeah, absolutely. Absolutely. You know, it's easier to maintain a positive attitude about trading when there are things more important in your life than trading. And there are things more important in your life than P&L. And spiritual values, one's religion, one's family. There are many things that are more important than day-to-day P&L. And so I agree with you. That does help me. It helps people in general maintain perspective. The idea of the Radical Renewal blog book, it's on my Trader Feed site, is that great trading, it's a Radical Renewal, blogspot.com. Yeah. But the idea is that great trading comes from the soul, not the ego. When we get the ego involved, it becomes about me, and I got to make money, and I've got to be successful, and all of a sudden we're emotionally wrapped up in each trade. When we can see a bigger picture, when we're able to stand back and see patterns in things and feel those patterns, that's not an ego function. That's part of what I'm calling soul. And so if we can learn to amplify the soul and keep a lid on the ego, that helps maintain a positive attitude, but it also helps us maintain a positive focus in our trading.
Your Ask My Answers, you said we all seem to kind of inherently have the answers to our questions inside of us. Maybe we've read your books. Maybe we've read Anne Marie's books. We've been around trading for a long time, and we've heard these things, over and over. And we should actually kind of know them already or sense them already. Why is it so difficult to do that?
Yeah, I think it's human nature that we tend to look at what most arouses our emotions. We lose money and we get frustrated and we focus on that. So you read the journals. Let's say you have developing traders who are keeping journals, and you read through their journal entries. You can learn a whole lot about people's mindset by reading their journals. And the journals will say things like, I can't believe I was such an effing idiot because I did this and this. And it's voicing their frustrations, which, okay, there can be a place for that. But what they're not doing is really looking at what they've done well. In other words, I was just talking to a trader about this. If you have a relatively flat P&L, then by definition, you can't be losing money on every single trade, right? Something has to be working. You're losing on some and making on others, and it's balancing itself up. So what are you doing on the trades that win? For instance, in my own trading years ago, I took a look at winning trades and losing trades, and I found lo and behold, the winning trades occurred dominantly at a certain time of day. It was in the morning hours when there's more liquidity in futures markets. Yeah. And so it was because I understood the larger participants of the futures markets. I could see what they do and think the way they think. When they were more active in the market during the morning hours, I was able to factor that into my trading decisions. Once we got toward midday and things were a lot slower and they're not participating, there's not the same kind of activity, choppy action, and my trading doesn't do well. So do more of what works. I really pulled back the midday trading and boosted the morning and started studying what was working in the morning hours. And lo and behold, became more consistently profitable.
How do we make that change? We were talking earlier during the stream about how resistant people are to change, even change that they perceive might actually be better for them or improve their situation. Why is it so difficult for people to make those changes that they know or assume are going to benefit them, their trading, their lives, and their families, and their spirit?
Yeah, it's almost as if some people feel like changing is admitting defeat. It's admitting that they've done something wrong. Well, yeah, you have done something wrong. I was doing something wrong when I was over trading the midday hours. You know, if you're a developing trader, you are an entrepreneur. Period.
That's true.
This is your business. And you want to think like an entrepreneur, which means fail fast, break things quickly, learn from mistakes. You embrace the mistakes, you embrace what doesn't work, and figure out what does work. And that's part of an entrepreneurial mindset. You're learning, growing, and it's all part of becoming better. Once you can get into that mindset, then all of a sudden the setbacks are not necessarily emotional setbacks.
Something to learn from everything we do.
I think
Absolutely.
so. And sometimes we do learn from our mistakes, and sometimes we can really learn from something we've done well, something that has worked out. Yesterday, I was following the stock market with some day traders, and the inflation report, PPI, came out, and boom, you saw buying coming into the market. And you look over at the fixed income market and what's happening with the 2-year, what's happening, with interest rates, and suddenly you're seeing that this was a game changer, this report. And you can look across the different asset classes and you can see what macro investors are doing. And so one of the people on the call piped up and said, this looks like it could be a trend day. Yes.
It was. It was.
A great call. Because if you looked at, there are certain statistics you can look at to tell you if buyers or sellers are dominant. So, for example, in the stock market, you can look at the NYSE tick, the number of stocks upticking versus the downticking. And that it comes out from the exchange very frequently. And so you look in the early hours and you're barely getting any net downticking. It's upticks and upticks and upticks, and no one is selling. So how are you going to get a down market in that kind of environment? Well, some traders who had been losing money were so locked into their ideas. We're overbought. It's time for us to come down. That they weren't seeing what was happening in the here and now. And so that can be frustrating for them. But if they can stand back and take in new information and say, I can learn from this, I can learn from these successes, then all of a sudden their learning expands. And that's a great thing about being part of a community, right? Because now not only can I learn from my good trades, I see what other people are thinking and doing and can learn and benefit from them.
That bias, it seems to be, really pervasive. When the market's rallying, it's a trend day to the upside. It seems so much easier just to try and pick a top, because you don't want to have to pay higher to get into the trade. You want to buy lower and sell higher. I've done it. Well, I mean, we've all done it. We've all tried to pick tops on trend days. You gotta, I guess, lose that bias. How does a trader kind of be? I guess it would just take a kind of a separation from the market and from a position to be able to recognize when there's information that's contrary to what we already think. I mean, there were probably a lot of traders yesterday that sold into that rally, and just got run over. How do we handle that bias, venom, if you will?
And John, that is where I think the ego comes in. I want to be the man. I'm going to call the top. I'm going. It's like, what? Rather than looking at what's happening specifically, moment to moment, bar by bar, in the market. And so, so for example, one of the favorite patterns that I trade is, you're probably familiar with the delta measure. You're looking at every single transaction in the futures market. And is this occurring at a bid price or an offer price? Are the traders hitting bids to get out or lifting offers to get in? And you look trade by trade by trade, and you accumulate all those data, and it tells you who's dominating. And sure enough, when we were making a top yesterday and started to flatten out, the delta measure at one point just kept climbing and climbing and climbing. People were still lifting offers, even though it wasn't immediately evident in price. So instead of getting the ego involved and saying, I'm going to call the top, you want to have the humility, maybe the perspective, to follow what the market's actually doing and eventually participate.
So I notice that when you make a statement, you look for data to validate. And so, for instance, you started talking about, hey, it looks like somebody said, hey, this could be a trend day. And immediately you began to say, how can I validate? So you look at the 2-year and then you look at the tick. And I suspect that this is something that maybe traders, we forget that we need to move step 1, 2, 3, 4. We just go from step 1, here I see this, to step 4, I'm going to do this. And so do you share with folks, hey, listen, if you can physically feel that you have a bias, are you looking at data to validate or invalidate? And are you willing to accept what the data says about what it is that price is actually likely to do? How do you take the trader that has the bias and lead them to physical manifestations of whether that can be true or not true? Or how do you get them out of that? How do you get them out of the broken cycle other than to validate? And is that what you would share with them?
Yeah, you're great question, Anne-Marie. You're role modeling what in medicine is called an evidence-based approach. In other words, if you're seeing a physician and you've got some pains, you don't want your physician to say, oh, this is certainly a heart attack in the making, and I'm going to get in there and operate. WTF. Let's do some blood work. Let's take some images. Let's gather the evidence. And so it's the same way in trading. We have different things that we can look at that give us evidence of what's going on. One of the things I really emphasize to really all traders is we have to figure out, who are we making money from?
It's great.
Who are we taking advantage of? Because that will determine the evidence that we look for. So when we are looking at what stocks are doing and then look over at the dollar, we look over at rates, we look over at other macro markets, what we're really saying is this part of a macro trend? If it is, big macro participants at hedge funds and investment banks are going to be involved, and that's going to lead to more persistent directional price action than if this is an isolated move. So I'm taking advantage of big institutions because by their very nature, if they have many, many millions or billions of dollars to move, they can't just deploy it all at once. You can't just say, oh, I'll lift the offer with $1 billion. Yeah, that blows the offer pretty well. Yes, so what you have to do is you execute over time, right? And they have execution algorithms that help them do that, and you can figure those out, what they look like. But as a smaller individual trader, you have the advantage of flexibility and speed. You can see what's going on and get involved while they do their execution thing. On the other hand, there are other times in markets where those big participants are not involved. And it's not a trending kind of day because you don't have that large involvement. And so now you want to figure out, all right, who am I going to make money from? Who's in the market here? And how do they behave? And so you may end up trading much more tactically in a range, looking at overbought and oversold levels. You look basically for participants who are going to be trapped. They want to go long, 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 but it's not a trending market. They want to go short, short, short. It's not a trending market. And so you're going to wait for them to be trapped and have to cover their positions, and you can make money on that trade. Do it again, do it again.
That's awesome.
Yeah,
very nice.
But I love starting the day saying to myself, I have no effing clue what the market's going to do. But that's another way of saying I have an open mind. Now, I may have done some research that would lead me to believe we had hit some oversold levels, that the breadth of buying in the overall stock market has been quite healthy. The vast majority of stocks trading above their short-term moving averages. So I may have a general sense for that, but I enter the day saying, let the market tell me. You know what it's like? It's like being a psychologist. So let's say I'm a psychologist and someone comes and sees me and I think I know in advance what their problem is and I start telling them what to do. What the heck?
That's a great analogy. Yeah, that's a great analogy.
First thing I have to do as a psychologist is listen to people. And if I listen well enough, I'll figure out what's going on. And if I listen to the market well enough, I'll figure out what's going on. But if it's all about me and my ego, I can't listen. We know some relationships that are like that, but we won't go there.
Right.
And people in a romantic relationship, if someone doesn't listen, where's that going to go?
Yeah,
right.
Sure.
So I've got one last thing I want to ask you. What do you think of the statement, we don't get any smarter once we're in the trade?
Oh, that's really interesting. I understand a context in which that makes sense, and I understand a context in which that's not exactly true. So when we're in the trade, we tend to own it, and we can become more tunnel visioned. So I definitely get that piece of wisdom. But when we're in the trade, we can see, and actually we can feel, when is it behaving in ways that we did not expect. So I'll be in the market and a positive piece of news comes out and we'll get just a little bit of buying and it comes right back in the range. And I'll say to myself, sometimes I'll even say it out loud, like, that shouldn't have happened. Like, why couldn't we have broken out? And so I think I did get smarter during the trade by processing what was happening in an open-minded way. And I get out of that trade before it actually breaks to the other side and creates a large loss.
Do you find it difficult for a lot of traders that you know and that you've worked with over the years to actually be accepting of information that's contrary to their original thought on the idea?
Yeah, the more experienced the traders, the more open they are to that.
The more open.
Yeah, and one of the great advantages of working in a team environment is that you have team members who are talking out what's going on in markets and telling you when things are aligning with your trade and when things aren't. And that can be really, really helpful.
Right.
Yeah. I think what happens with developing traders is they get their hopes up. They have dreams. They're going to make it big, and they're going to get funded. Yes.
Right. Right.
Yeah. And they're so caught up in that it's hard to pull back and say, okay, this didn't work. The evidence isn't there. I won't take a big loss.
Well, there you
It's
go.
harder.
Right. So we do have a bunch of questions. I've kind of grouped them into kind of categories. I'd like to ask this first one. It's Voltaire and Liberty, kind of similar questions. How do I get over this fear of entering, even if the setup is crystal clear? The outcome of my strategy during test runs are all extremely good, but when it comes down to pulling the trigger, I freeze. I do have a long history of heartbreak while learning to trade, but I know it's my way out. And if I want it, despite the psychological impact it is on me. So the other question was, of how do I avoid making mistakes when I have the right ideas and fail on the execution?
Yeah, I'll take that first question because they mentioned the long history of heartbreak. And I believe that's what I was referring to with respect to trauma.
Trauma.
Mm-hmm.
And so if you've gone through not just normal trading losses, but heartbreak losses, then there's a natural human tendency to not want to have to go through that again. And so you're not going to pull the trigger.
Yeah.
And so the question becomes, how do we overcome that trauma? And there are techniques in psychology for doing that. In fact, at one point in my life, I was carpooling between Ithaca, New York and Syracuse, where I taught in the medical school. And in the carpool, someone else was driving and they pulled in front of a car and the car hit our car and we flipped over 1.5 times, landed on the hood, and I'm upside down. I actually was it was unbelievable. I was in the front passenger seat and my head went through the back windshield. So I'm lying there on my back and I can see the top of the car and I can see blood coming out of my head. So fortunately, the ambulance got there, medics got there quickly. Unbelievably, I didn't have any broken bones, just big lacerations. They got me to a hospital, set me up. I ended up looking like Frankenstein for a while, but I survived, obviously. Well, so they send me home from the hospital, and I get in the car to drive, and what happens? Total panic attack.
Oh.
Just sitting in the car. I'm not even moving. I'm in my driveway. Total attack. That's PTSD, because at some level, I'm afraid what happened before is going to happen again. So we have to create a safe environment. That's what therapy for trauma is all about. And so I had to do a lot of visualizations about getting in the car, turning on the car, driving the car. I had to practice driving up and down in my driveway. I had to practice driving on roads with no traffic and do it again until I rebuilt the sense of safety. That's what we have to do in trading. And so often, if we've been traumatized, the thing to do is to go back to trading by simulator. Go back to sim trading, no capital at risk. Just get back into the habits of pulling the trigger, making the decisions, learning from what you do, learning from mistakes, learning from good behaviors. And then as you feel more comfortable in the simulation mode, you start very small and do it with real live capital, but very, very small, and build the habits back. And that's how I got to the point where I drive now.
Thank you, Doctor. Next question, and I know we see this a lot here, and I'm sure you've seen it a lot as well. There's a number of questions that kind of go along the same line. Samuel, I think, has one of the more clear questions here. When the market is going against me, I keep on wanting even more than 2 hours. If it's not in my favor, I just close positions but I take a little profit and leave money on the table. I don't think anybody's really necessarily hardwired, Doctor, to succeed at this, because we avoid losses by staying in them. We create bigger losses that way. And the other side of that coin is once we see money in that, it's very tempting to take it, especially after some losses. How do we flip that wiring in our brain, Doctor?
By making trading as rule-based as possible. So for example, excuse me, if I'm trading directionally, then I'm looking within the trend for evidence of cycles. In other words, we come up, we come down, we make a higher high, we make a higher low, and I'll use the higher highs and the higher lows as points to maybe take a little profit, add some, and so forth. But all of that is rule-based. I need to see that there's a short-term oversold level at a higher level to add. Now, if we start to sell off and we violate the previous low, I'm wrong. I'm out. The market's telling me I'm wrong. It's by definition, it's not an uptrend anymore. And so that is all rule-based. And by rehearsing those rules, cementing that over and over and over again, those become part of us.
Thank you,
So
Doctor.
it's habit formation.
Habit.
That's a
You
great
would
way
say,
of putting
yeah.
it. Yeah. Think about people in performance fields. They've done what they do so frequently that it becomes second nature to them. If I have to be, if I'm a baseball player, I'm a hitter, and I have to think about, what's the next pitch going to be? And maybe it'll be a curveball, and this is what I would do. Well, by the time I'm done thinking about it, the pitch is already coming past me. You have to do that pattern recognition in real time. And so, yes, we develop the right habits by making everything as rule-based as possible.
In other words, know where you're wrong at the beginning and stick to it. Don't move your stops. Don't kind of,
yeah. And at least in my trading, I'm trading against levels. And, if a certain level has absorbed the selling, and then we get buying, well, we shouldn't go back to that level, or certainly not through that level that previously absorbed the selling. By definition, that's new market participation.
Demand, sure.
Yeah. So, by having reference points and rules about those, it makes it easier to make decisions in the spur of the moment.
Okay. In one of your answers before, you mentioned, if you have trauma based on trading, go back to the simulator, get back into the rhythm of things, get past your fear of taking risks on the simulator. There's a lot of questions here about, if I backtest, if I trade on sim, I seem to do really well. But when there's actual skin in the game, whether it's in a trading combine or being successful in a trading combine, moving to the XFA, how everything seems to fall apart. It seems a lot more difficult the further you get into actual having that skin in the game or risk. Somebody was here saying, I trade okay in the combine, but when I get into the XFA, I just seem not to be able to do as well. I may be getting too conservative and lack the confidence to trade. I'm sure that, this is something that you've seen, especially with newer traders and maybe even some, more seasoned traders that have had some serious losses, just trying to get back into, understanding that there's risk and that there's skin in the game, and being able to operate as if there isn't skin in the game. What would you say to somebody in that situation?
Yeah, and again, a good question. I would want to, if it were me, establish that consistency before going into any competition, any combine. I would want to be able to handle the skin in the game of just normal P&L, and then tackle the additional pressure of getting funded and getting recognized and all the things that go along with being successful that way. What's happening is that we can put something on a pedestal, so to speak. It becomes so important to us that we wrap our self-esteem into it. That's why I was emphasizing earlier having things in your life that are more important to you than trading and P&L. If I lose money in trading, it's no fun, but I have a wife of 40 years. I have 5 children, 7 grandchildren, 4 rescue cats, and a career as a psychologist that's been very fulfilling. And so you want to have a full life outside of trading. If trading is everything to you, and sometimes you even hear developing traders say that, this is my passion, this means everything to me.
Mm-hmm.
It's a real vulnerable place to be psychologically. It'd be like having a financial portfolio where everything you own is in Bitcoin. Okay, great. Well, Bitcoin does really well. You do really well. Bitcoin gets volatile, and all of a sudden you're up, down, and your whole life depends on things you can't control. So by having a balanced life, I think it makes it easier to weather those kind of psychological pressures. But first, going on the simulator, then going small outside of the competition and getting used to making money, losing money, and making your trading rule-based, and then tackling the competition. That makes a lot more sense to me.
Thank you, Doctor. Question from Yaz. What are the best exercises for concentrating on the markets, and how frequently do we need breaks for optimal performance?
Yeah, there's research in psychology about this, that they even say attention is like a muscle, that we use it, but it has its limits and it can become fatigued. There are exercises, and some are variations of meditation, some are variations of self-hypnosis, where we can train ourselves to sustain concentration for longer and longer periods of time. There are biofeedback devices that I've written about, where they give us immediate feedback about our body, including our brain waves. And we can do exercises, and there are little video games that you can play that are these exercises that make you sustain your concentration for longer and longer and longer periods of time. So that is something we can do to train ourselves and help us become less distracted. But no one has unlimited attention span. And so taking breaks, refreshing, I've always seen top traders doing that during the course of the day. They'll get off the desk, they'll talk with people, They'll go have something to eat or drink, but they'll refresh themselves. At a couple of the hedge funds where I work, there are gyms in the building where they work. And they're very much encouraged to get off the desk, go to the gym, work out, refresh, come back on the desk. Very, very common.
Awesome. I used to go to the World Gym across the street from the Mercantile Exchange when it was on Wacker to do just that.
Right.
This is from a question from Kay, and I've been Kay, late 80s, early 90s. I'm just going to read the question. I've gotten angry, cried, wanted to quit a million times, medicated, and done everything to succeed for the past 6 years. Sure, there's always something I can get better at, but Coach, when is enough enough? How much pain should you endure to become a great trader? Respectfully, and thank you.
That's a wonderful, wonderful question. Not everyone is going to agree with me about this, but I think we have to have a stop on our trading career, just like we have stops in our trades. We know from the research that performance is a function of three things. Talents, that's what we're born with, our capabilities. Skills, that's what we're taught by mentors that we rehearse. And the third is mindset, psychology. And that includes cognitive mindset as well as our emotional perspective. If we don't have the right combination of talents and skills and mindset, we're not going to be distinctively successful in any performance activity. I've written about this. There was a time where I took up trading full time, and I made some money. I hated it. Absolutely hated it.
I remember.
Because my greatest talent and what gives me my greatest fulfillment is being a part of people's lives. It's a social strength. And that was just not fulfilled sitting in my apartment and clicking away with a mouse. And so I've kept on trading. It's been in a more part-time context and directed myself to something that I feel I do better, but something that speaks more to who I am in terms of talents and skills and certainly mindset. So I think it makes sense to try different things, to learn from different people. But if you're going through one frustration after another, maybe the answer is not to try to play the game better. Maybe the answer is to play a better game. And there might be something else in your life that is your calling and that really captures who you are and your talents and your skills and who you are psychologically.
Wonderful answer, Doctor. I know that
For sure.
pretty sure that everybody that trades at some point has really questioned the fact if they should continue. And there was really a great way to kind of frame that. Nobody can tell you when it's time to hang it up or if it's time to hang it up. It's something you just have to recognize in yourself, and then go find the other things that speak to you. I know a lot of people say, my passion is trading, and I always kind of sit back and I go, I think your passion should be for markets and understanding markets and understanding yourself, and that's probably a lot closer to getting yourself to being a successful trader is in those understandings.
Absolutely. The idea is to live a fulfilled life. And if markets happen to be your way of doing it, that's wonderful. But there's an opportunity cost. If we keep trying to trade, what are we not pursuing that really could be our path?
Awesome. So you probably see this a lot. This is from Pierre. I often find myself self-sabotaging after a good win streak. I have implemented a stricter risk management, like trading micros or trying to keep the losing days smaller compared to the winning days, of course. But I still find myself doing dumb stuff from time to time. I'm becoming more proficient in recognizing my triggers and walking away, but I still lack self-control level, the self-control level that I want. Any advice helps me improve my journey?
Yeah, it's a really good question. My experience is that when people have a win streak and then suddenly kind of fall apart, it's actually not because of psychological reasons. It's because the markets have changed and they're slow to recognize that. And that leads to psychological frustration, obviously, but they're not recognizing when we've transitioned from a trending market to a more range-bound market, a busier market to a slower market. They're not recognizing in real time those shifts, and so they're not adapting. One of the ways I've noticed that is, well, I talk with many different traders, and many of them will all be profitable at a certain period. And then in another period later, they're all losing money. Well, if it was just their mindset that was the problem, it wouldn't be happening to all of them. It's because of something that's really shifted in the market. So I would encourage the person submitting the question to really get micro, really focus on how are we trading, look at patterns of volume, look at correlations among markets, look at price levels, and be hyper aware of when the environment's changing so that we can more quickly pull back and figure out what this new change is about and adapt to that.
Thank you, Doctor.
People talk about having an edge in markets.
Yeah.
Okay. I mean, that's crazy, right? If there was one edge for all markets, I mean, then you'd have, the game would be over, right?
Right.
You want to have multiple edges for different kinds of markets. And you want to, teams I work with, the quant teams, do they just have one or two systems that make money in all markets? No, I don't think so. They have many, many, many different systems that turn on and off depending on market conditions. And that's what you want as a discretionary trader. You want to have many different edges for different kinds of markets, and you want some kind, and the ultimate edge, some kind of edge that tells you when the environment is really changing.
I mean, back in the pit, the edge was buying the bid or selling the offer.
There you go.
We don't get that edge anymore. There's a much longer term look to that. I mean, if there is an edge like that, it's probably the HFTs or algos that are getting it. That's their edge, right? So, I think we got time for one more question, Doctor.
Sounds good.
Okay. Avi's been struggling with a combination of tilt and revenge and FOMO, and sometimes doesn't recognize the difference between the issues when trying to reflect on trade outcomes. An example would be hitting risk limit early in the session and continuing to trade, or not accepting a loss by stopping and re-entering multiple times, fighting the momentum or the tape on the wrong side of the market. I'm using some of the risk tools available and sizing down, but is there anything I can do to practice to help pick up on these issues earlier when they're happening in real time? And I think it's really important to be able to sense when your switch is being flipped, when you're going on tilt, when your cheese has slipped off its cracker. To be able to recognize that is a very, I think, important and useful tool. Would you agree, Doctor?
Oh, totally agree. As you know, I teach in a medical school and I work with physicians. And, can you imagine if you're in the operating room for surgery and your surgeon starts to go on tilt?
That'd be so bad.
Yeah. They get up and the incision didn't work, and there's too much bleeding, and you're really frustrated, and you start cutting, and well, why does that never happen to physicians? Why does that never happen to a surgeon? They've trained themselves in such a way that they don't have those tilt reactions. They're not so personally, emotionally invested in what's going on. They're rule-based in what they do, but they've trained first. Where do they do surgery? They do surgery by watching others do surgery, watching experienced physicians do surgery. Then they do surgery on cadavers where there's no risk. And then they'll assist in a live surgery. And then finally, they'll do a simple surgery themselves. So they constantly, they're learning in a safe way so that they don't have these huge emotional reactions. So what we want to do is give ourselves enough learning time, as we mentioned in simulation, trading small enough that we're not going to get emotionally caught up in the trading, and gradually build that, just like the surgeon, so that the right behaviors, the right trading becomes second nature, and we don't go on tilt. When it's all rule-based and we've internalized those rules and we've done it many, many, many times, we don't go on tilt. That's the lesson of the surgeon.
Well, I'm going to get a chaperone for my next surgery.
There you go. Absolutely. And make sure that he's not trading GME while he's doing the surgery for you.
No doubt.
Doctor,
I do have a question. Sorry,
Go
ahead.
Yeah.
I was just going to ask, do you believe in the 10,000 hour rule?
Oh, yeah, in terms of expertise development. Yeah, there's really good research about what's called deliberate practice, that it takes 10,000 hours of practice that's structured in a certain way where you're practicing. Deliberate practice. You're learning from it, applying it to the next practice session. So you're always taking away learning lessons, but it takes 10,000 hours to achieve expertise. And I think many times developing traders are so eager to succeed that they want to short circuit the 10,000 hours or even the 1,000 hours, and they end up trading prematurely, putting money at risk prematurely, and they're not ready for that emotionally. They're not ready for that in their skill development.
Thank you, Doctor. Anne Marie, you were gonna ask a question. I apologize.
I was, and it's directly related to that.
Okay.
In terms of, we know what's supposed to happen. We know we need the time. We know we need the deliberate practice. What I find very often is that traders lack self-control or a self-governing event that says, you don't have anybody over your shoulder, but you don't need to enter that trade right now. But you go ahead and do it because impulse control is driving so much of their engagement with the market. So I think impulse control is really on the long list of things that we talked about here. Impulse control is potentially a real problem. And we know we need to create good habits. We know we need to have deliberate practice. What's the one thing you could say to someone that helps them look in the mirror and go, hey, I've got an issue with impulse control. I need to be more measured in my approach to the market. What could you call on the inside of them to be able to go, yeah, that's true. I need to retool and refocus?
Yeah, it's a great issue. I'm not sure just refocusing is going to be enough. There are people who have chronic problems with impulse control. They have attention deficits or attention deficits with hyperactivity. But there are people who have problems with maintaining focus and concentration, even if they're not diagnosed or diagnosable as ADD. And that's why I mentioned earlier about the biofeedback, because we can train ourselves in focus and concentration, because if we're totally focused, we're not going to suddenly act on impulse. And the biofeedback keeps us acting in a measured way without impulse. So for example, I'll give you an example of a biofeedback device I use. It goes around the head. It's a little band. It's called Muse, M-U-S-E, and it measures brain waves. Yeah, it measures brain waves. And so there's a little video game you can play where you're in a rainforest and you can hear and see the rain falling. And if you are focused and concentrating, the rain starts to decrease. If you're scattered in your thinking, the rain starts to pour. If you're in the zone and super focused, not only does the rain stop, but you hear the birds chirping. And
That's
it counts
awesome.
for you. It counts for you how much rain has fallen, how many bird chirps you get. And so you're using that as a tool for training yourself to stay focused, stay in the zone, stay focused, stay in the zone. Because if you're in that zone, can sustain that zone, then you're not going to act on impulse. You're not going to want to take that trade. So there are ways of practicing that skill. Some people have significant problems with attention span, and short-term trading might not be for them.
Well, thank you very much, Doctor. Thank you very much, Anne-Marie. We're a little short on time here, Doctor. We can't thank you enough. We'll look so forward to the next time we get to have you on. Hopefully you'll come back and visit us again.
You're a joy.
I look forward to that. You guys are great, and I look forward to staying in touch.
Wonderful.
Thank you
All
so
right,
much.
folks. Yes, thanks, Anne-Marie. Thank you, Doctor. Thanks all of you for hanging out with us. We've got the top quiz coming up here very shortly, and we'll see you in just a couple of minutes. Thank you again, both of you. What a wonderful segment.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will demonstrate how to assign a nickname to your accounts. Here is a practice account on the top left of the Topstep X screen. By clicking on the drop-down arrow here, we can see that we have multiple accounts, a practice, and several combines. If we want to add a nickname to any of the accounts, we just click on the little pencil to edit. It's telling us that it's a nickname for this account. So let's put this one as ES as an example. We click on save. We can see now that it shows ES in the list next to the actual account name. We can also see that it shows the nickname in the accounts tabs. For example, here and here, we can see the name. We can choose another one and edit. Let's call this one NQ and choose save, and we can see it in the list here as well. These are available for combine, for practice, and for live. If you wish to change the name or remove it entirely, just go back to the edit. You can change it and save, or just choose delete. It will remove it from the description. Please note that this pertains to the actual combine individually. So if this combine needed to be reset, it would give you a new combine number, and you would need to come back to this location and add your nickname back again. They do not carry across. It will also change if you have a combine and you pass to get to the XFA. It will not carry the nickname over, because it will be assigned a different number. Now this is true for practice, for combines, for XFAs, and also for live. We can choose, edit, And let's call this one scalping as an example. Choose save, and we can see that it does update in all of the fields. This has been a demonstration on how to assign a nickname to your TopstepX accounts.
What's up, traders? It's Mick here with Topstep. The best program to get you funded is now built around you. Topstep's got a new offering, and it isn't a one-time sale. It's the best all-in price, and it's going to be here every day. Now, there's two paths to funding. The new and exciting path is the no activation fee path. This is where you're going to pay a little bit more upfront, but then pay nothing when you pass the trading combine. You've got your standard path. It's a lower monthly cost. Then when you pass the trading combine, there's an activation fee. That activation fee is actually coming down in price. Topstep's got the best program, the best payout policy, and now the best all-in price. I can't wait to see what it offers our traders on their way to a better lifestyle.
Oh, wow, here we are. We are live with Jeremy Springer, the special teams coordinator of the New England Patriots. Jeremy Springer, thank you so much for joining us. Can I ask you, is this the pinnacle of your career coming on TopstepTV? I have to ask.
Man, it is. I ain't gonna lie. I haven't been to Super Bowl yet, but I've never been on a day trading site, and I'm excited to just be on here talking to people that, you know, aren't really in my realm of work per se, but it's still fun to get to talk to other people.
Awesome. That is true. Yes. Oh, okay. So here in trading, we compete, right? Discipline, motivation, consistency, grinding, and I'm sure you're looking for the same on the New England Patriots. What is it like working with the best of the best of the best, and what are some of those characteristics and traits that you see that make them your kind of guy, our kind of guy? What does that mean exactly, and what do you look for?
Yeah, I think when you're looking at the top of the top, the best of the best, you know, we just had our draft, so we're picking guys in the first round, second round. Overall, it's the consistency of what they do, right? Consistency is by far the biggest thing. When you look at our head coaches, I've been around Sean McVay, now Mike Vrabel. I've been around some really good players like Matthew Stafford, right? And those guys all have one trait. They're very consistent at what they do every day. Okay. They're going to come and show up at the same time. They're going to have a routine, and they're going to be very diligent on that routine. The players that we look for, like the Will Campbell that we got in the first round, the Travion Henderson that we got in the second round, those guys, for 4 years, they were consistently really, really good at what they did. That's first and foremost of what we look for. And then after that, it's like, as an organization, what are we looking for off the field, right? What kind of things what is he doing in the community? What is he doing around his teammates? How is he with his family? How is he with the president of the university and things like that? And that all kind of formulates an idea of what we want and how we're going to bring that guy onboard him and go from there.
How do you know if they are not your guy? Are there any red flags that you look for specifically? Obviously, they're all amazing at what they do in their profession. And here in trading, you know, sometimes it's just about P&L, profit and losses. If you make money or lose money, I guess is the bottom line. But there's more to it. And same dealing with professional athletes. How do you know if they're not your kind of guy? Like, what exactly? Is there any telltale traits?
Yeah, I think it always fits on what your organization is looking for. Like, what are you as an organization? For us, what are we looking for? Guys that are really good off the field. You know, if they're guys that are not doing stuff in the community, guys that are not doing stuff with the university, that's always kind of a backwards deal. If they're a guy that's maybe late to meetings, or a guy that doesn't show up to the training room, or doesn't eat right, doesn't take care of nutrition, those are all red flags for us. And he might be the best of what he does, but you can tell by those things right there that maybe a 10-year veteran, he might not be able to sustain at this level, because at this level, they're all really good at football. Right. I mean, they're all really, really good. But what are they doing off the field consistently? Again, the consistency part of it, to be able to translate that into a 10 to 15, 12, 13-year career. Those are the guys that we're trying to find right there at the end of the day.
So basically it's longevity. Longevity is the name of the game in the NFL and professional athletics, and same here in trading, looking for those that can consistently do it. They wake up at the same time, same diet, same regimen. They bring the juice, Jeremy. What does it mean to bring the juice?
Hey man, I'm gonna tell you one thing with our guys. With professional athletes, they are always looking for an edge. Okay, that's first and foremost. But if I'm preaching consistency, if I'm preaching, being disciplined and doing certain things right, I'm not detailed in what I do, our guys aren't going to trust me. And I can do it. I can show up 50 times, and on that 51st time, I come with low energy. I come with a bad plan. I'm not organized. I'm not structured. They're gonna seek me out, and then they're not gonna trust me after that. Mm-hmm. So for me, it's very important that I show up the same way every day. I prepare the same way every day. My meetings are detailed. Okay, they're concise. Okay, they're direct. They're able to really tell me what I'm telling them, and then bring it back to me. Those things right there have to be important. And then like when we're in the cafeteria, am I connecting with our guys? Like I want to inspire them. In order to inspire them, I got to connect with them. So all those things right there are very important for me to kind of bring that energy and juice every day for my guys to feel loved, feel wanted, and want to build connections throughout the time they're with me.
Amazing stuff. Okay, so if you're bringing the juice day in and day out, what if one of your players isn't necessarily bringing the juice? Is that okay? Some people, everyone has an off day. How do you deal with that? Because sometimes in trading, we suffer losses, right? We're losing $5,000-$10,000 in real money, and it may be hard to bring the juice the following day. So here at TopStep, obviously we're looking for trading talent. If one of your players is, not bringing the juice that day because they're having an off day, what do you do? What can we do to help the trader or the player bring that juice?
That's a very good question because again, I think you can definitely relate that to us. We had a poor season last year, we went 4-13, right? So you're losing games. The media's all over our back. You're going to get fired, this and that. So it's hard to come in. It's easy to come in when you're winning, as you guys know. Easy. When you're winning, you're on top. It's easy, bro. Like it's all good.
Yep.
But that's what we're building right now is connection, and the connection part of it. Me understanding what he likes, how he gets motivated versus Javon, what he likes to get motivated from. Building those connections right now, so that when we get into training camp, when we get into the season, and this guy's having a low or he's having a dip in his performance. How can I reel him back in? I'm okay if he has a bad day. Mistakes are mistakes, failures are failures. I invite that. I'm the same way. I don't mind failing. You learn from it. But when they're having those days, having those times, we're in those ruts, I think having the connection part is vital for them to be able to trust you and to be able to move on and trust what you're saying is right. And so that they can feel better moving forward and better into the future. The connection is everything.
The connection. How do you get that connection? You get to know them on a personal level, their family, where they're from, their upbringing. What is so how can we connect? Give me some tips on how we can connect outside of just, snap the ball, run, block, pass, things like that. So they do gain the trust, because here at TopStep, they need to gain the trust in the markets, in the firm, in the coaches as well. It's more than just buying low and selling high. So how do you actually get that connection? How can we get our connection with the traders like that? What do you do?
You just said it like, this is what as I've gotten older in my career and been around some really good coaches and really good players, it's not always about football. So I try to find time. I do find time. Okay. Like we have our cafeteria, which is, I'm in my office, is like right there. Meeting room's right behind me.
Okay.
So instead of going in the cafeteria and sitting down and talking running back play with our running back or talking about special pump protection, I want to talk about his family. Like, hey, what's up, man? What's going on with your wife? What's going on in the back end? And through those conversations, through time, when they come in my office, like, let's not talk about football right now. We can talk about that a lot, but let's talk about what's going on in your life. And those connections that I build right now, that's what the off-season phase is for, from now until the middle of June before we get into training camp. You build those connections now so that they trust you. So when you are trying to get them out of a rut, when you are trying to tell them everything's going to be okay, they trust you, because it's not just about football. It's about life outside of football. And I think that's where I've kind of grown over the years. And now working in the NFL, it's still the same thing. High-level guys,
sure.
You can say one thing, like, oh, they're all, money-driven. They're all this and that. At the end of the day, it's about relationships and connections. And when you have that, you can really build trust around the organization. They build trust in you, even when the times are high and the times are low.
So they're not all money-driven. Okay, but at the end of the day, isn't it all about wins and losses? Winning's everything, right? Well, if you guys are winning and you see them getting comfortable, because here in the markets, winning takes care of itself, right? But sometimes you get complacent. So sometimes you get comfortable, you start feeling yourself. You got to make sure that everyone's still sitting up straight, right? In those meetings, you're still eating right and things like that. Do you hate losing more than you like winning? Is that how it is? Or what, like,
It's
you know what I'm saying?
it's not even about that. Like, yeah, winning is the name of the game. Like, in order to sustain in this profession, you have to win consistently. Plain and simple. That's why coaching and that's why being a player is hard in this profession, because when you're losing a lot, usually guys get fired, guys get traded, things like that. But the culture and what you set from day one has to continue to be the same, whether you're 5-0 or you're 0-5. The culture, the culture, the culture. What we're doing on a daily basis. Like for us, we have a team identity. We have 4 things that we talk about: effort and finish. Okay, effort and finish is number 1. That's a non-negotiable. We're ball disruption or ball security. So ball disruption is, on defense, we're playing violent to the ball. On offense, we're taking care of the ball, right? The third thing is our details, technique, and fundamentals. And our fourth thing is making great decisions on and off the field. So those 4 things don't change. They don't change in the special teams room. They don't change in the offensive room, the defensive room. Those 4 things got to stay consistent from day 1 to day 500. Because it's always easy day 1. It's always easy, like I said, when you're 3-0. But if those things aren't being upheld early on, then they're really going to become a factor when you're 0-5. And everyone's talking different coaching points, different identities. And now we're not cohesive. We're not working together.
Sure.
We gotta be consistent on our identity and what we're preaching day to day.
I guess, like you said, the easy time, the winning takes care of itself. It's the tough times where that consistency can be broken, and those 4 pillars, if you will, can be shaken. What I gotta ask you, what does it look like in a locker room if the team is 0-5? I don't know if you ever have been 0-5 when people are pointing the finger. Sometimes in the markets, you point the finger at perhaps the market, the technology, when indeed it is yourself that needs to look in the mirror. What does that look like in the locker room when times are tough? You're in the gutter and you get picked back up. How do you do that? What is it? Yeah. Does it get like?
Yeah, I think there's two different. I've been in both. I've been in a 5-0 locker room. I've been 0-5 locker room. I've been losing seasons, winning seasons, and I'm telling you, the overall difference is the culture. And at the end of the day, it's like it's culture, and what the guys we brought into the building, were they consistent in what we were bringing in, or they were just guys that were bad off the field? Were they not making great decisions? Were they guys that they slipped and we let them slip? Like they came to meeting late and we didn't find them, right? So like it's everyone's standards got to be the same. It can't just be, hey, Stephon Diggs cannot come to any meetings, and Drake May doesn't have to come, but the third string running back's got to be at everything, right? Everyone's got to be held to the same standard. And the teams that have been on 0-5 in bad locker rooms after a loss, they go their separate ways, right? The winning teams, we're connected, man. Like it's a connection. We're all here for the same reasons. No one's like, hey, I need to have this game. We're all like, I have the best game I can have for my teammates. And when we have that, you have that cohesion, usually good things happen.
Culture. Does that start all the way at the top with Mr. Kraft?
Is that where it comes from? Ownership hires the guy to set the culture. So ownership is ownership, because again, ownership is not always around. They're dealing with, they're multi-billionaires, right? So those guys are not always around. The head coach sets the foundation and upholds this foundation, sets the culture, upholds the culture, gives it to us. We got to help him uphold it. And then we got to bring the right guys in so that we're consistent there.
I guess that's exactly
it's not easy to do. That's why every year is different, right?
It's not easy. Hard. And I want to ask you about that, because actually, your boss, Coach Vrabel, you were with the previous regime, Mayo, correct?
Yeah.
And
yes, I was.
You stayed on board. And what was that like? Are you indeed, I guess, Coach Vrabel's kind of guy? Why do you think that you were retained from between 2 coaches? Because that's quite rare for those that are might not be familiar. That's pretty rare in the industry, right?
Yeah, I was retained. I'm very fortunate and grateful for that. I'm learning. I'm going through it right now. Going through practice right now. We're in phase 2 with our players, and to go through practice right now and trying to figure out what Vrabel likes, what he doesn't like, trying to uphold the standard that he wants in my meetings, to uphold the standards he wants on the practice field. It's a whole new system compared to the last previous coach, or even Sean McVay, or even some of the college head coaches I was before that. And again, what Vrabel's done so far, I just tell you right now, like he can run any business in the world. I think he can be any coach or any kind of team, because he's just very consistent in what he does. And there's a standard, there's a way we do things, and it's not going to change again for Drake May. It's not going to change for our 4th-string running back. So again, I just think we do got the right guy, and it's a great change to see that, and I'm grateful to be a part of it.
Incredible stuff. Do you see coaching styles moving in different direction over the old school way based on talent, based on, sometimes, back in the day, 2-a-days, that doesn't exist anymore, right? 2-a-days, you maybe not give them water or something. They were punished and things like that. How have you seen things change? Because here in trading, there's an old school way that was much more cutthroat, if you will. Things are kind of swinging back towards the traders. And are you seeing something similar when you're dealing with the elite, the best of the best? How have things changed over the course of time from your experience?
Yeah, I've been coaching for 15 years now, right? So, I started when I was 21, 22 years old, and now I'm 36. So I've been coaching for 15. It's been a drastic change. Even when I started coaching, you can still, dog cuss a player and it'd be okay. You can still be really hard on them, run a bunch after practice. And now with these players, a lot of it's the why, right? A lot of you got to show them why we're doing this, why we're doing that, why we're doing this. They're a lot smarter, in my opinion, than they were 15 years ago than I was. Like, they understand at an early age because they're watching YouTube videos or watching all kinds of things. They know what it looks like, and they want to know the why I'm doing this drill, why I'm doing that. And so you got to be really good and detailed in your work. And I think that's the biggest thing, because they're not just going to listen to you. They're going to want to see proof of what I'm coaching and why I'm doing it. And also, these guys are getting paid in college now with NIL. I mean, they're getting paid. They're coming in. Already, some guys have already made $8-10 million.
Big man on campus.
Yeah, the big man on campus. They made $10 million their senior year. They're coming in. They just took a pay cut, and now they're trying to prolong their career. And how am I going to do it and help them? They want to know the why. And I'm okay with that. I kind of like that. I like that they're smarter. I do like that they're smarter now.
That's fair enough. Will they ask you why? Will they just be point blank like, Coach, why the hell are we doing this? Or do you preempt it with that? Do you tell them the why right out of the gate, or do you wait for them to ask? Because you're in trading. Sometimes coaching styles change, markets change, and we need to adapt. And they will ask why. Do they challenge you when they ask you the why? Yeah. It's like, Coach Springer, what the hell are you doing? Why the hell are we doing this? And they ask you directly, or they,
I didn't mean to cut you off there, but I said earlier, right? My meetings are clear, concise, detailed, and direct. So when I do that, there's an objective for my meeting, okay? And then there's the why behind it. Like, this is the objective. This is what we're trying to learn today. And I'm going to show them how we're going to learn that and why we're going to learn it, okay? And then they got to be able to tell me back. They're the direct part of it, right? They got to be able to tell me there's a lot of questions in my meetings, a lot of giving back. And I just think when you do that and you have a system for how you do meetings, it's going to give them the why. It's going to give them the reason why we're doing it. And if they have questions, well, then I'll have that detailed part up.
Good stuff. We are being joined by special teams coordinator of the New England Patriots, Jeremy Springer, in the house here on TopstepTV. Thank you so much for joining us, my man. Let's get to know you a little bit. What are you most proud of in your coaching career thus far? I know it's a bit of a softball, and then I'll ask you the flip side, but what are you most proud of up until this point?
You know what? I'm just been proud of the journey that I've been on so far. I think life's a process, and I've been, 7 or 8 different places now in my career, and every place is really, I got to meet new people, build new friendships, develop my personal self, my ego, my non-ego. I've learned a lot throughout that time, and I've been grateful for that. And even now living in the Northeast, grateful for the summertime and the springtime, because the winters suck. So I'm like, hey, this is really nice. And just all the things that come with moving, come with the process, meeting new people. That's what's been really good in my career so far.
Good stuff. What's it like dealing with diva athletes? They're getting paid they're getting paid a ton of money, and you know what? They're just not feeling it this day. Sometimes our traders are making a bunch of money and they think they know what's best. And you know what? Hey, numbers don't lie. How do you deal with that? I mean, what do you do when it's like, nah, Coach, I'm just not feeling that right now. How do you, make them see the light?
I've done it 2 ways. Sometimes I talk shit to them. And sometimes they like that, and they'll get their shit going. Or sometimes I'll let them be a diva, and then I'll bring them in my office, and that's a connection part. I have a connection with the guys already. Bring them in my office, like, come on, dog, what are you doing, man? You're making us. What are you doing right now? Like, this is not professional. So there's ways to handle it. I think there's 2 different ways. It just depends on your relationship with the guy and what he's doing. Also, I coach special teams, so the Drake Mays, the Stephon Diggs, they ain't playing for me. So there's some of those guys I don't have to deal with on a day-to-day basis, and some of our other coaches got to deal with those guys if they're being divas. But so far, I haven't ran into a bunch of that just because I think I've been around some good guys, and I think the connection part is the most important, which they've been able to trust me.
How important is confidence in yourself for the player and the coach? Hell, I mean, you see the headlines. Maybe you're not reading them, but I'm sure you get the whispers and then you get fed back to you when you're feeling the heat. You got to believe in yourself. Do you or the players, you guys ever question yourselves? Like, am I doing this right? Could things be better? When confidence is shaken, because, trading here, it's easy for confidence to be shaken, and you start questioning yourself, saying, am I cut out for this? What do you do? What can we tell our traders to keep believing yourself when confidence is shaken?
Yeah, I mean, that we can so relate on that, right? I mean, when you're having bad days, when you put so much time into a practice or a game, and then you lose or you get your ass kicked, you get humbled. Those are things that happen to me all the time still. And the biggest thing is I always kind of fall back to, what I do daily, my routine. I'm going to work out in the morning to take away the anxiety. I'll meditate at night to just kind of accept the day and be grateful. Those are like things for me, right? Yeah. And I just think at the end of the day, I'm exactly where I need to be. So failure is okay. I'm okay with failing. And you got to be okay with that and say, all right, I failed today. I had a shitty day, bad practice. We're 0-4 right now. Accept it. Know that you're exactly where you need to be and learn from it. Have that growth mindset. And you can't have a mindset where you want to win every time, because you win every time. You don't know how to lose. You don't know how to fail. So I'm okay with that. And I know it's a part of a process my entire life. It's never going to stop. So I just try to keep things in perspective and kind of move on from there.
Man, oh man, Jeremy Springer joining us. Quick, tell us about the New England Patriots. Where are you guys in the season right now? Obviously, the draft just came and went. Yeah. You guys got rookies in camp right now, I do believe. Tell us how we're looking for. We got a bunch of people in New England right now watching. They're absolutely loving this stuff. So tell us, how is the team going to look this year? Don't give me the cliche shit either. Don't give me the cliche shit either.
No, I'm not. I'm going to be real. I'm going to be real with this. So, since Vrabel's gotten here, and I keep looking at, when you say players, I have this personnel board right here. So I just keep looking at all the new names right there.
Can we see it? Show us the depth chart. Show us the depth chart right now.
There's no depth chart. Yeah, there's no depth chart. It's just a roster of guys right here. And, for what Vrabel's done in a short time that he's been here, the players that he's brought in to back up Drake May, our quarterback that we drafted last year, and then on the defensive side, the guys he signed, and then our draft that we just had, which I was really excited about. Really, really excited about. What you say?
You guys drafted a kicker, correct? Rookie kicker?
Yeah, we drafted a kicker and a long snapper. We drafted two
and
guys.
a long snapper. Okay, that's very unusual. That's unusual. How much pressure is this kicker going to be on? I mean, he's going to be under.
Hey, there's only 32 kickers in the world, so there's a lot of pressure.
Hell yeah, there is.
Only 32. Okay. There's only 32 of them in the world. That's it.
And I'll talk about this. So kicker is kind of like a solo position. It's kind of like a solo sport individual, if you will. Obviously, you need the snap and the hold, things like that. But it's mental. They obviously have the leg. What are the characteristics that make the kicker your kind of guy? Obviously, they got the big leg. They're unflappable. They can handle failure. What did you guys look at this? The kicker and say, you know what, this kid's ready for the big leagues. What'd you see?
Well, he's got to make kicks, right? Everyone's like, oh, no shit, right? Well, yeah. Well, he's got to make kicks consistently over a career. And our guy that we brought in from Miami was about 90% over 4 years. He had a damn good career in Miami. He kicked in a lot of big-time football games. The second thing is he really kicking in real environments, right? Is he kicking in with 80,000 people, or is he kicking with 10 people in the stands? I want a guy that's been through the fire, because he's going to be through the fire here when he's playing Gillette, when there's 90,000 people and you're playing on CBS. So that kind of thing is there. Then I look at the different traits, which I'm not going to get too much into, but the ball flight, the ball rotation, the height that it gets off his leg, those are important things. But I think one of the most important, it's very, very undersold, is what kind of guy is he? Is he kind of like a guy who's, and I say this, not being mean, but a specialist in a way where he has no friends on the team. He's kind of hidden. We've all seen those kickers and his long snappers that are kind of different, that kind of hang off to the side. Or is he kind of like an athlete? Did he play sports in high school? Did he do some things in college? Who were his best friends in college? Were they linebackers and tight ends, or were they just specialists? Is his girlfriend good looking? Is he a competitor? Those are the things that I look for right there. There's a lot of different things I like to see, and I think those things are important right there. And it's a whole collective, and I think we got the right guy from Miami to do that.
It's more than just what happens.
I don't mean to cut you off, but you let me finish the last thing. I think we're going to be really good this year. I really do.
Of course you're going to say that.
Hey, no, I'm serious. Like, we're out with our team right now, our veterans in phase 2 of the offseason program. Our rookies come in next week. We're just looking at our team right now. We have good size, length. We got a good quarterback.
Yeah.
The pieces that we brought in free agency, I really do think we're going to be much better than we were last year. And I'm really, really, really excited for the future.
Man, Jeremy Springer, special teams coordinator of the New England Patriots, man. Thank you so much for giving us and being so generous with your time. A lot of insight, looking for our kind of guy. We're looking for our kind of trader here at Topstep, man. Coach, thank you so much. We really appreciate it. If you have time, can you join us again, maybe in the summer, and just talk about this again? You're the man.
In the summer. Summer would be great. Don't give me during football season, though.
Hell yeah, you're busy. You're busy, man. One of the best right here. Jeremy Springer. Ty says what's up, by the way. We'll get out of here. Thank you so much. Topstep TV. We got meat coming up here on the other side of this. Coach Jeremy Springer in the house, only on Topstep TV. Let's take a quick break. Turn it over to got meat in the green room. Coach, thank you so much. This is Topstep TV. Let's go. Where else do you get this stuff?
Traders, the moment you've been waiting for is finally here. Auto OCO brackets are here. Each order entry can have its own take profit and stop loss, and OCO cancels the rest on fill. Whether you're a busy trader who can't babysit the charts, or a part-time futures trader who wants more full-time control, or anybody who just wants more disciplined exits without the constant screen time, this is definitely for you.
I'm interested to hear how you use AI for your coding as well.
Yeah, so I use Cursor. My process looks like this. So basically, I spell out what I want, and then I make a plan. And I usually, if there's like a big feature that I want to implement, I make a to-do list, a document. The other thing that I would do, I like hyper refine these plans. So I'll have them like go back and forth, and I'll audit the plans like continuously until I feel like, okay, all the holes have been patched.
I was doing arbitrage with Bitcoin. I had 30 Bitcoins. But the Bitcoin was at 140. 30 months. And I bought them at Bitcoin DE 30, half of 60. Yes. And I was selling them empty.
I've got this cute little sticky note right off my screen. Did you set your trailing stop? So I can remember at some point in my trading period, like, did I do that so I can lock in my profits and walk away? That's what keeps Topstep above all the competition. That's why I'm with Topstep. They're trying to help you win and be successful.
This is the only business that rises to the surface all of your emotional baggage. It'll come to the surface in trading. No other business will do that. All your beliefs will come to the surface, and you'll either deal with them, you'll manage them, or you'll be out of the business.
Click like, click subscribe. This is Topstep TV. Let's go.
Click like, click subscribe. This is Topstep TV.